All right, guys, I am back again with another Ichimoku weekly weather report for the week of January 24th. Today's session is very long, guys. I'm very sorry, but maybe I got to find a way to shorten these videos. But a lot of content, a lot of things I went over, really discussing the markets really hard. So really, I think if you really want to understand Ichimoku and understand these markets and market structure, then you can't probably watch the video all at once, but watch it in sections. You'll be able to pick up on some things, and hopefully this stuff is helping you guys out, guys. And if you have any suggestions, you want to know anything, or you think there's anything that I could do better or to shorten the videos up or anything, just let me know. I take all that into consideration. But we're going to get into it right now. We're going to start talking about market structure. Basically, with Ichimoku, we're going to be talking about the wave analysis and the price observation theory. This week, we're not going to be discovering much about time analysis, but next week, we'll get into some time analysis. And you think I'm long now? Wait till we start talking about time analysis. I'll be even longer. But guys, hope you enjoy this and hope you learned something. So let's get started with this. All right, guys, before I get started, please read and see my disclosure statement here. Please understand that I am not an investment advisor. Anything that I do or show and say today is for educational purposes only. So therefore, if you decide to take upon anything that I am offering or talking about today, please do consult with your own financial advisor so that they can help you to consider and discuss all relevant risk factors associated with trading the Forex market. All right, guys. So before I get started, I always like to give you a word of encouragement. And today's word of encouragement comes from Joshua. Joshua 1:9. The children of Israel had wandered in the wilderness for 40 years, and it was up to Joshua to lead them into the promised land. He'd have to claim the land from its current inhabitants, fight and lead battles, and provide spiritual leadership for a large group of people. As he was feeling the overwhelming weight of the task before him, the Lord offered these words of encouragement. Have not I commanded thee? Be strong and of good character. Be not afraid, neither be thou dismayed. For the Lord thy God is with thee, whitherso thou goest, wherever you go. These comforting words can apply to all of us as we seek to live a good life and overcome our own unique challenges. All right. Life can be full of challenges, sorrows, and tough decisions. But even amidst hardship, the Lord counsels us to be strong and courageous. Understanding Joshua 1:9 can help us to face hard things with faith and confidence. God bless. All right, guys, welcome to another edition of our weekly Ichimoku weather report. Today, we are going to be talking about, same things, the Forex market, but I'm going to be talking about our not our time analysis, our wave analysis and price analysis theories will be incorporated into the trading. Time analysis won't be incorporated this week again, but next week, I'm probably going to incorporate some time analysis. Thing is, time analysis takes a little bit longer. So for me to go through each chart would really take a while to go with time analysis. So I'll incorporate that a little bit more next week in our sessions. I haven't been doing the sessions live all the time. Sometime I've been recording them and then putting them online for you guys. Today I wanted to get it live so that you guys could ask me questions. I see a lot of questions in the chat room and so forth. So therefore I wanted to make sure if you guys have questions today, please do ask me. Don't be shy. If you want to talk to me, I don't know if I can do that. Maybe the mics can open up, but if you have a mic and you want to talk, just let me know. I can try to open up your mic for you. Other than that, we're going to get started. All right, so today we're looking at the news before we do anything. I want to make sure people understand you must look at news before charts. News comes before charts. If you're doing charts and no news or charts and then news, then you're not doing the right things. So you want to, this is your business. If this is your business, you want to be doing it properly. You want to be doing it right. And the right thing to do is make sure there's nothing that can hurt your business. What can hurt your business is a bad trade. How you can get into a bad trade right off the bat is not knowing if there's any news. All right. So if there's news and you don't know, like tomorrow, January 24th, there's a lot of news here. All these red are important news events that could move the market. So let's suppose you go to get into a trade at 4 a.m. All right. And then all of a sudden, 4:30, the market goes crazy. You didn't know there was news. Now you're down big time. All right. That's because you weren't aware of news that day at that time. So therefore, you need to be aware of news, what's going on, and so forth. So the first thing you should do is check these charts before you take any kind of trades, no matter what time it is. Check the news events. So I'm using something called Financial Juice. I have the Financial Juice Pro, and also they I'm kind of affiliated with them, so they gave me the pro features for free, so I get to see all the top news here. But you'll see the same things if you just go to financialjuice.com, and you'll be able to see this same kind of news events. And I leave this up on my chart, and on my desktop, and then I get all these things that are happening throughout the day. What's happening pops up right here. So even you're trading stocks, it shows you all equities, it shows you everything. So all the news will pop up for anything that you have that you're trading. All right, so this is a very good site for you to use. And it also has what we call Tick Strike. I'm going to do a video on Tick Strike. I'm not going to do it today, but I'm going to do it on sometime this week. It's going to be about, because Tick Strike, really, you use that more. You could use it for scalping or for day trading, but you could also use it for swing trading. I'm going to show you how to use this and show you what it is. So I don't have time to do that right now today. Really, we want to do that when the market's open anyway, because then you could see this thing in action. All right. And I'll be able to show you all about that. So that's one thing. So finally, here's the news for this week. So Monday, pretty big news coming up. A lot of red news here. You could see this red news. So the red news here is 3:30, 3:30, 3:30, 4:30, 4:30. A lot of German news, UK news, Aussie news. All right. So watch all this. Look out for this if you're getting into any trades. Tuesday, looks like, again, a lot of German news, USB news. And then on Wednesday, US news, FOMC statement, Powell statement. So a lot of news coming out on this whole week, really. So we want to be careful this whole week. You can see all the red news that we have here. So make sure you see this stuff and know what's happening so that you don't get caught up in a bad trade. All right, so let's go to our charts here. Let's get these charts. All right, so we are on the Aussie Swiss franc. We don't want to be on the Aussie Swiss franc, right? We want to be on our first pair, which is going to be the Aussie CAD. So we're on the Aussie CAD. I really love using Ichimoku price observation theory. And I love using the wave analysis because it helps me to understand the structure of the market and where the market's going. So I'm looking at this Aussie CAD. Down on my chart, I have this cumulative volume. All right. Really like this a lot too. All it is it's really the OBV, but it's the transactions that are taking place. The difference between your buy and sell. All right. So if you got 10 buys and you got 20 sales, that's a 10 transaction difference. So that's what you're going to see on this. This is showing you that. And after a while, as it adds up, you could see if there's like a divergence. So what I use this mostly for, I do not use this to enter any market. I use this as divergence. I want to see if there's a divergence at a level, a support and resistance level, or a top, or if I see some things with Ichimoku. Because when we talk about Ichimoku, I'm always talking about the cloud, how thick the cloud is, and if we got a C clamp, and how far Tenkan-sen and Kijun-sen are from each other and from price. All right, and how far price is from Kijun-sen. All these are relative in your trading decision when you're looking at Ichimoku, at trading Ichimoku, because that lets you kind of know if you're at a bottom or if you may see a retracement and so forth. And then when you see divergence along with those indications, that helps you even more. So when we look at this chart here, we could see the market kind of flattened out. So that's the issue right now with this chart, is it flattened out. And we're not really in a N wave. But unless we violate this level, I maintain the N wave structure. All right, because what I'm talking about when I talk about the N wave structure is just basically, I'm going to draw the bigger waves just starting from here. 1, 2, 3, and 4. That's a complete N wave. All right, so we want to see the next N wave. So it would start from, so we started at this high and we got this N wave. So we want to see the next N wave. We start here. 1. Now this broke. All right, so now we would have suspected that the market was getting into a new N wave to the upside, right? But you have to violate 2. I mean, if you don't violate 2, if you violate 2, that's where we're saying we're getting into the new N wave. All right, but what happened was when we came down here, pushed up and didn't violate this 2 level, then we started to think, what is happening with the market? That's when I always say you need to break this 2 level. We didn't break the 2 level, so therefore we start thinking maybe like a P wave structure may develop, right? A lot of junk on the chart that I'm showing you, but just want to make sure I'm explaining this stuff to you. So the market got kind of like off schedule with as far as like the wave formation, and we started to get more into like a triangle pattern, a bearish triangle pattern. All right, so a descending triangle pattern, basically, as you can see right here. So you got a slight descending triangle pattern, then we broke it. Well, as we broke that, we started a new wave. Let me show you the new wave again. So we said 1, 2, and now we're still thinking that the market's going to pull back because we didn't break this level. So then we can say we're going to go to the downside. So we go down, and how far we're going to go. All right, so the market went down because what it created here first was this I wave. Then the next I wave plus an I wave equals a V wave. A V wave plus another I wave equals an N wave. That's what you got here. So this is where the market stopped here. Now, when I talk about values, this is an N wave. This is an N value. I'm always looking for the N value and the E value. I'm not really looking for the NT value too much, or the V value, but I'm going to show you those values on other charts. And I'm going to show you how to find those values without any, just using one indicator. All right. So let me delete that. So what I'm seeing happen here right now with this Aussie CAD is we bottomed out. So one thing you want to pay attention to, I pay attention to deeply, is the divergence. All right, let me show you a couple things as far as the divergence goes. Let's go back to here. So when we look at this chart, I like to see if we hit a top, if there's any divergence, but there was no divergence here, but the market still did drop. All right, and then we got to this point. I didn't see any type of divergence, no bearish divergence. All right, or no continuation divergence, which would be hidden bullish divergence, right? But then we came to this point right here as the market continued to drop right here. So basically, as we dropped from here down to here, and I don't trade divergence, remember this. You could see what happened. The indicator started going to the upside. Then we had a move to the upside. All right, so that's where the divergence kicked in. Then we had from this low to this low, which came to this support level. This was hanging to the downside, but again, the oscillator was aiming to the upside, if even. So it shouldn't be even, it should be lower, and it wasn't lower than this point. So therefore we had divergence here. We had bullish divergence. And then what happened? You could start to see the transactions that were happening. You had buyers coming into the market, buyers coming into the market, buyers coming into the market, and then the market moved higher. All right. So therefore, that's how we look at this divergence thing. And we don't trade this divergence. So we wouldn't have traded anything here except this level, because there was a level here. We had a level where we could find the market support. maybe we had something back here I didn't really check, because really we did, if you really look at it. Let me go back real quick. So when you got to these two lows right here, right? That's how you, but this is against Ichimoku, so I probably shouldn't even be talking about this. But I'm going to show you how it helps you. Here's where you had some divergence as this was moving to the upside. Actually, it was kind of even, but then you could see a little bit of divergence here. So here's where the divergence took place. The divergence took place right here. This was diverging. Therefore, you saw a change in structure. The market broke these fractals and moved to the upside. All right. So you kind of could see some things happening with the chart if you look at that. When you look at that, what you saw was a flat cloud, a crossover with a thin cloud, a crossover again, and then another almost crossover, and then a crossover. There should never be 1, 2, 3, 4, 5 crossovers within this short span of time. All right. Because what that tells me is this market is flat. And therefore, I'm gonna be careful when I'm trading it. So therefore, I would look for levels of the market, the highs and the lows, and probably just trade between those levels. So what I like to look for is, like, when I see a flat market, I want to see where the top is. All right, and then I want to see where the bottom is. This would have been the bottom at that point. So we would look to trade those tops and bottom, those support and resistance levels. All right, because you could see how flat Tinkerson and Kijinsen are. You could see how flat the cloud is. You could see how many crossovers you have with Tinkerson and Kijinsen. Therefore, none of this is helping us. So Ichimoku wise, I wouldn't really have it on my chart at this point between this area. I would probably hide it. All right. And then I would probably trade these levels and look for bounces off of the low, off of the high, off of the low, get to the high, try to bounce, look for a high, look for a bounce there to the upside. Here it broke through, came down to a new support level. And then when we hit that new support level, it's where we had the divergence. Look at this level. We had the divergence. Then we suspect the market to move higher when we see that divergence at support and resistance level. All right, that's what we suspect. All right, and now what's also helping us with this, thinking about that in this manner, is this. When we look at Ichimoku now, we are bearish with our crossover, but we're flat. All right, no strength in the market because Tinkerson's flat, Kijinsen's flat, span A and B are flat. So your cloud is flat, everything is flat. All right, and you have a double bottom. So when I'm looking at this again, Ichimoku's not really helping me here. So I would think that the market could bounce here. Now, when we talked about the structure, we're talking about that N wave structure, right? So I still kept the structure because we didn't violate this level. And that, so the structure is again 1, 2, 3, and then we found support here, but there's a possibility we could move to this end level. All right, we could see the market move to this end level, but I'm seeing this divergence, so I'm thinking we may see the market push higher. Then maybe we push back down here, and eventually we could, depending on what happens or what goes on with the market. I can't tell you what's going to happen with the market. I just look at the analysis and the levels. I just really look at the levels and what I see as far as wave structure, where the market could go or what the market might do. There's a lot of things the market could do in this at this point, so I can't really tell you. Want me to show you what the market could do at this point? So where we have this level here and we're talking about an N wave, we could then start to see the market do this, right? It could do this. So that would then put us into a P wave formation. I don't know if it's going to do that, so I can't tell you if it's going to do that. It could go from here up to here, but I don't know if it's going to do that, but it could do that. What I show you is things that the market might do, things that you should be prepared for, things that if you see happen, then you know what you might want to look to do. Or else the market could push up to this level and then drop down to this. So there's so much that could happen in this point. At this point, I couldn't really tell you. But the thing that's really important to me is the support and resistance levels. So when I have levels, I trade those levels. So looking at a double bottom here, and in the divergence, I would think the market would push higher. All right, and it started to push off of this level. It may push back down, but we're flat, so therefore I'm not really going to be able to give you much analysis as far as Ichimoku, and I wouldn't trade it with Ichimoku here. I would have traded the flat level, bounce, and look for a long. All right, so if the market violates this level, it could push down to this end value. Now, also, when I see a level that's like this, and if we violate, I want to see the market push back up to the level, because I only trade support and resistance one way. At support, I go long, always. At resistance, I go down. I never go down at support, and I never go up at resistance, ever. All right, I never do it, because if I did, then I'd be considered a breakout trader. So how could I say this? Well, right now, this is support. If the market goes below it and gets below there, then this now becomes resistance. So therefore, I would buy it here if I had price action entry and go long. But if the market decides to violate this level, then at this level, what I'm going to look for is for it to retrace back to this level. And then I will sell it at this point. All right. And then I would shoot for my targets. These targets aren't real strong to me, because the end wave that we just saw, maybe it's completed here or it could complete there. All right. So I don't know. And if it doesn't complete there, that's where we start talking about the deeper values. This is longer term, but I really don't see that. But I can't tell you what the market's going to do. So do I have any questions? I'm going to move on to the next chart. Any questions? No questions. Okay, cool. So looking at this chart, I'm going to show you an easy way how to find targets with Ichimoku. So this market is bearish, as you could see. So we have our crossover, which is bearish, but everything's flat. Now we had a bullish crossover, actually. So let me mark all this stuff. Our crossover here was bullish, but now we're attempting to cross again, which would be the bearish cross. Our future is still dark, but it's so thin because we got flat here. So this is a flat market. All right. So therefore, that's why you're seeing that. Chiku span is inside this price realm right here. So when you consider what you want to see, you don't want to see really Chiku span between this and this. Other than that, because if it stays in between this, you know what that means? It means we're ranging. You can't get out of that level. So if you're within that level, then that means you're ranging. You're not going to trade this as a trend, right? So that's one good thing that'll help you. But then the next thing is, if Kijin-sen could break below, if Chiku span could break below this level, then we would see the market go lower. So I'm always looking for the N wave structure of the market. Yes, the market stopped creating a kind of an N wave, but I'm going to show you how it still is creating N waves, because what I looked at is, when I see the N wave, I'm going to mark the smaller waves first. There's a wave here, 1, 2, 3, 4, 5, 6. All right, so I'm saying that as a wave structure. But let's just go from this wave structure, all right, because we went from this high, right, down to this low, back up to the highest point of this level. So this would be 1. This would be 2, this would be 3, and we're trying to see where 4 could be. 4 could be a couple places, all right? 4 could be where we are right now. I'm going to tell you what that level is and how I got to that level. It could also be that we find support back at this level. I need to see what this level is, all right? I need to see what this level is going to be in the past. So it's a decent support level because you had some bounces off of that point right there. You got support here, resistance here, kind of like resistance there, support here. So this is a decent level. So we could see the market come back to this bottom, right? Back down to this double bottom level. It could do that. Now let me show you some things that are kind of stopping us to see where we are. So first of all, let's look at how you can find these levels really easy. Going to mark these levels for you, and you have to think like this. This is let's call it A. We'll do it in letters instead of numbers. Let's call this point B. It would actually be 2. This would be 1. So 1, 2 are B, 3 are C. And now what we're looking for is 4, 4, and so forth. This would be a 4. This would be a 4 because the market comes to these levels. So that's what we're searching for. Well, how do we find those levels easy? Remember what these letters are. A, B, C are 1, 2, 3, because now I'm getting ready to show you how to find them really easy. So on TradingView, you could use this tool that will help you find all these very easy. Go to your price range tool. Remember, this was A, and take it down to B. That's the first thing you're going to do, or 1 to 2. And how long that is, 391 pips, right? So what you're going to do to find these values, so let's find the N value first. Actually, let's just find the easiest value first. You go from 1 to 2 and then double it. So if you're going to double it, you take it and you move it down, and then it would give you that level. So that 1 to 2 is the farthest one. That therefore is going to be your E value. So then let's go to the most popular one, which would be the next one, is going to still use this level. So again, it's going to go from 1 to 2. But this time we're going to go to 3, from 3 instead of from 2. We went from 2 before, so that means we went from 2. This time we're going to go from 3. So 3 is this level here. So that gives us this N value. So all that's saying is that this leg, which is this value right here, 391 pips, means 1, 2 is going to be equal to 3, 4. That will give you this N value. I just gave you your E value, your N value. Now let's look for the V value. So the V value is going to be different now. So now you have to change this. So you're going to go from the 3 level. So 1, 2, 3. So go backwards from 3 to 2. That's going to be how long V is going to be, but you're going to add that to the bottom of 2. Right? Take it down to 2. And that gives you your V value. So now you have all your 3 values right here. Easy values, easy to find. So finally, you want to see your very last value, which is your NT level. You're going to go from this top. So you're going to go from 1. You're not going to go to 2. You're going to go to 3. And at 3, it's 136 pips. What you're going to do is take 3, move it down from 1, and move it to the top of 3. And that gives you that NT value. You just now know how to find all your Ichimoku values that you need. That's how you find them, very easy. And then you could just put a line on your chart for each one and then name them. Or else just put a line on your chart and just see how those levels hold out. So as you could see, the market is currently at this NT level. If we can't get through NT level, you could see we're ranging pretty much. We're flat. So I don't know what the market's going to do at this point. There's no divergence really, but you could see bulls. You could see bulls coming into the market, right? You could see buyers coming into the market, but I don't see it happening with the chart yet. All right. So as I see that happening with the market, with the cumulative volume, then I'm suspecting that maybe we'll see that, because this is the strong support level. We had support there. Basically, we can move this down a little bit, but you have good support in this area. Good support here, and I would call it like a zone. And then you have support here. This would be a little zone for me. So the market could move even deeper. All right. So that's what I'm seeing. I moved this NT level down. Currently, the NT level is actually right here. We're right at the NT level. Okay. So that NT level could hold us. We'll be ranging. So I really don't have any trade that I would look at trading with as far as Ichimoku wise. We're too flat. We got too many mixed signals. Oh, my mic was off. Sorry. So what was I saying here? I said basically what I was saying to you guys was this. We're flat here. We have mixed signals with Ichimoku. So the mixed signals are that we have Chiku spans below price, so that's cool, but we're really not below price, guys. We're inside this realm, this area here. So we really want to get out of that area in order to see the market start moving. Our crossover of our Kumo twist is bearish, but it's so flat. They're like kind of together. So what that means, it could go any way. All right. Once these start separating, A and B, span A and B separate. All right. And then also I had a bullish twist here, a bullish Kumo twist. I had a bullish TK crossover, and then I'm starting to get a bearish crossover. So, but the problem is Kijinsen's flat, Tenkan-sen's flat, and the market is flat. So what I said I wanted to see happen was this. I'll wait for the break. The break may take us straight down to this level. I don't know. But once we break, you could probably see it push back to this level really quickly, or else it may take a couple days to push back. But once it pushes back to this level, then we're going to short it at that point. Then we would search for these values, N value, all right, this double bottom, this N value, this V value, and then finally this E value right here. All right, so that's what you would start to look for once you make that. Now, if we can't get through this point here, and if we only get down to this level, and the market can't break this level, and we remain with a flat cloud like this, then we're probably going to see a change. All right, because you could see all the buyers coming into the market. The smart money is showing that the market, that they're buying the market. All right, so we really don't want to be going against that, because if we are, we're shorting while it's showing smart money moving higher, more buyers coming into the market. So you really don't want to be going against that. And I really don't want to make any type of trade based off of Ichimoku. I have no true trend. So you don't really know what the market's going to do. So again, what you need to do is the things that I talk about is just hide Ichimoku, find your support and resistance levels. So find your top, right? Find your top, find your bottom, and trade support and resistance. Hide this, and then trade these levels. You could go to a lower time frame at that point, go to a 4-hour, and you trade inside the box, inside this this area here. You could see you trade off of these levels at that point. So you could find a trade here, trade there, trade here, trade here, trade here, then looking for a long here. Now, based off of the 4-hour time frame, and I'm not talking about Ichimoku, we look like we have some divergence, but this could break. If this breaks, then we won't have divergence, because it would have to then break and go below this level in order for us not to see divergence. So if we hold here, if you see good price action on the 4-hour time frame, then you may see the market push higher. Let's go to the hourly time frame. On the 1-hour time frame, we're starting to see buyers coming into the market also. All right. So this looks like a possible bounce off of this level, quite possibly, and the market move higher. Until the level is violated, I just keep trading that level. Eventually it's going to get violated, and then once it gets violated, you go to your lower time frame. All right, so maybe instead of going to the daily, you'll go to your 4-hour, and what you'll look for is what I told you previously. So instead of looking for it on the daily, you will go to the 4-hour, look for the pullback. Then you can short this market at that point, because you'll have the break. You'll know the market's good, and once it comes back and test it, if it tested and doesn't go higher and you get that price action short, then you know you can trade it short. But if it violates and then comes back and tests and continues higher, then you can tell with this divergence that you're seeing, because that's a divergence there. Let me show you. This is going down. This is coming up. So at a support and resistance level, we really want to see that. So one only thing that's could be different is this. Let's go to the higher time frame. Is this divergence could maybe not kick in till this point, because that means we could drop here and get a double bottom down here. But we have some support here, so I'm thinking maybe we get a bounce here. But again, I could be wrong. If it violates this level, do like I told you. But when it gets here, if you still have that divergence, so if we get this, we're still climbing, And now we're bullish. While this gets down to here and can't violate, that means you're flat here. And then you have divergence. So I don't know if divergence is going to kick in here or here. So I just have to watch the price action. And then I can get a trade off to the upside, okay? If I get down to this point, I could get a trade to the upside. If I look to short this market, I could wait for the violation and the trade here and trade down to this level. If we violate this level, then we know our next levels. We have them all marked on the chart. So we have everything there for us. So we never know what the market is going to do, but we want to prepare for what it could do. So I'm just giving you scenarios what the market could do, and that's what you want to look for, those types of things. Let's move on. We'll be here all day, right? Let's move on. Let's talk quickly Ichimoku, Aussie yen. So we don't need anything on our chart, but since this is Ichimoku time, we're going to put it on. So again, this market is kind of mixed right now. To me, it looks like a new N wave to the upside, but I think we're getting ready to violate that because now we started a new smaller N wave to the downside, right? And there's no divergence anywhere. Getting ready to have a bearish crossover. You're flat here. Your cloud is still bright. In order for things to change, the real structure, I don't know. You have to break this cloud. All right, because I don't see what's really going on here. I mean, because our fractal level's been violated. Just mark that. Our fractal level is here. It's been violated a little bit. This lower fractal is this point right here. So let's see if this market's going to hold at this level. I think the breakout, the Kumo breakout, would be the trade. So if the market breaks below the cloud and you get the crossover, if Chiku spans below, you're not going to have that. So this looks like more of a ranging market. It doesn't look good for me as far as taking a trade, because the thing is, I got a crossover here, I got a crossover here, I got a thicker cloud with no angulation. Now I do have some angulation here, all right, span A, but span B's flat. These levels aren't holding, and my crossover is bullish, looking like it's trying to be bearish. Now this also looks like a waterfall trade that I used to tell you guys about, but the waterfall trade happens after a top, a high top. So I wouldn't call this a high top, but it still kind of looks like a waterfall trade. Let me show you exactly what I mean when I say waterfall trade. So I always tell you guys that when you're looking at a top and a bottom, the top can be considered when you see a thick cloud, really thick cloud that starts rolling over, it usually signifies a top, all right? And then you'll see the market never breaks that higher level. And then what starts to happen is this. This is what this waterfall trade looks exactly like. If this was water, right? If this was water, and this is the edge of the Niagara Falls, when you break there, that's the waterfall trade, and it looks just like that, and the market drops to the downside. All right, and that's what it looks like it's happening here. So what we want to prepare for is how are we going to know what the market is doing here. It's really tough in this area because I have support levels that I like to rely on for the market to bounce, but we're also seeing the structure change. Our future is still bright. All right, so we're kind of mixed signals here. So what I want to see now is this. I want to see what the true direction of the market is going to be. Is this just a correction here, and the market goes higher? So are we going to see something like this, right? Because that'll keep this N wave formation going, right? It'll keep this N wave formation going, but it also, we could see the market continue to the downside. If we're going to see that, I want to first see a couple things happen. I wouldn't trade the downside even on the breakout because our cloud is wrong. Chiku span is wrong. Our crossover might happen at that time, and that would be the only thing we have. So we wouldn't have everything we need. We wouldn't have Chiku span below price either, and it wouldn't be below Kijinsen at that point either. So therefore, the breakout is kind of hard for me to trade. So what I would trade and what I would look for now is this. I would look for my fractal level here, guys. Let me use the zone So this is the bearish move. This is what we're thinking if we're bearish, if this is going to continue to the downside. So if it's going to continue to the downside and we're going to keep moving lower, we just let it move lower because we got our fractal level. All right. And we look for the market to pull back to that to confirm the direction of the market. So if it's going to drop, then maybe it pulls back to this level. We could get short at that point. All right. So we don't take the breakout here because we wouldn't have all Ichimoku signals that we need to have that breakout, right? So instead of taking the breakout, we just let it break and then retest this fractal level, which is the main thing for us, trading that fractal level. Okay. So that's what I would wait for. But now the other thing that I'm seeing still, even we do have a cloud that's a blue sky cloud, which means we're bullish. So we would still be thinking the market's moving to the upside, right? Our crossover is bullish, but it's starting to change. But that doesn't mean it will change. It could drop and then you could see this still stay flat and then get that angulation. All right. And Chiku span is in between price. I can't even tell if it's like here or where it is because it's right at this level. But if it stays above this level, if it's above this level and we get back above the cloud, then I would start to think we're seeing our structure remain intact. So here's where we would look for the market to go to. So if we're talking about the market continuing to stay to the upside, all right, what I would think the market would do, because we would then be in this N wave here. I'm going to draw the big one for you first. So we would be in this wave here. All right. And that's what we would be in. Now there's a wave structure from here that in order for this to continue an N wave, a big N wave, it needs to continue to go here and violate this level. So on a smaller scale, if it's not going to do that and it violates this level, then we're going to see the new N wave structure. All right. So there's not always trade opportunities on charts that we look at, but what we try to prepare ourselves for is where could the next trade take place? Where could the market possibly go? If we can figure that stuff out and have levels to where the market may go, and then if the market gets to those levels and the market holds at those levels, and then we see price action, then we can trade the market. Then we kind of know what it's doing, because we don't exactly know sometimes, and we never know, but sometimes we're not even sure if the direction is just a correction or a pullback. All right, because we don't, we could consider this the big leg. All right, but if I look at a smaller scale, then I would start to say the market's like this, right? Then it started to do this. So that would mean we're in a bearish market, and it would keep doing this. So we're prepared for that, because we're saying if it does that, we're looking for it to pull back to this level. Then we would short. We don't short anything else yet. But if we're wrong on that aspect, right, then if it's going to go back to the upside, well, once it starts breaking this level, then we realize what the market's doing at that point. All right, because then we'll realize that it's keeping this N wave intact. Okay, so then we know that. If it can't violate this level, well, then we may start to see a couple things. We could see the market push back up to a top and then maybe push back down. And then you might see that P wave formation. Or you could see a ascending triangle pattern that breaks to the upside. Not ascending triangle pattern that breaks to the upside. All right. So those are the types of things that you could see happen with the market in this situation. And sometimes I just don't know, so I just wait to see. And what I'm waiting for now, I want to see if this move down is correct, because then I'm going to look to short it at this point. All right, and take it down to here. Let's look for the targets on this thing, if it is bearish. All right, based off of the cloud and everything else, it may become flatter more than bearish. But let's go continue with the direction, right? So continuing with that direction, let's go with the big scale. And also a tool that I use for my targets is this trend-based fib extension. So what I do is mark this, and then we would be saying that the market's going to come down to a 1-to-1 level, which would mean the 1-to-1 is going to be that N value. All right. And so we would think the market could come to that point. All right. Whoops. Didn't want to delete that one. The N value, I always like to have it green. So we're thinking the market could push down to that level if it becomes bearish, if it's going to stay intact here. And in order to stay intact, it would have to break this level. All right, and you can see we're breaking structure here. When the market's moving down, we start breaking these bear fractals. When we move up, we start breaking these bull fractals, and we don't break these bear fractals. Now, when we're moving down, we break these bear fractals. Ichimoku's slower than the market. The market's showing me already what it's doing. It's breaking bear fractals. But if I'm going by what Ichimoku's showing me, then I have cross mixed signals. But the market's showing me bearish already because it's breaking bear fractals. It usually doesn't break these bull fractals. I mean, it could, but a lot of times it continues to break these bear fractals as it continues to move to the downside. Makes a new bear fractal, doesn't violate the bull fractal, breaks the bear fractal, doesn't violate the bull fractal, comes back, breaks the bear fractal, and continues to move that way. All right, because you can see it here. Bull fractals never got violated. Bull fractals never got violated. Didn't violate until here. Now we violated, and so therefore we started breaking bull fractals at this point. And then we got here, and then we started breaking bear fractals again. So therefore you follow the direction of the breaks. And in this case, we're breaking bear fractals. So I kind of want to stay with that, even though Ichimoku's telling me it's still a little bullish. Ichimoku likes to hang on till the end because you know why it does that? Because it's just like a moving average. It's slower than the market. All right. The market's already telling me what it's doing. So I want to kind of pay attention to that. And that's why I kind of say I have mixed signals. But overall, the bigger term, then Ichimoku can help me a little more. But when I see directly what's happening, then I have to take in this aspect what's happening with the structure of the market. That's what I do. Any questions on this one? I gave you your low target, and I'm not going to give you your high target because we haven't completed the 3 level yet. So we did complete the 3 level to the downside. We haven't completed a 3 level move to the upside. So therefore, I'm not even going to show you a target to the upside yet. But the downside target, I only showed you the the N value. Let me show you the other values if we're ever going to get that far. And I don't see us really pushing like that. Look at this. And we're almost trying to get in a P wave here, right? This market is trying to get into a P wave itself. Let me show you. So starting to move to the upside here, starting to get into like a P wave formation. All right, so we could see something like that. Just a lot of stuff right now on this chart. So let's move on. Aussie New Zealand dollar. So Aussie New Zealand dollar broke out to the upside. Everything looks nice on this chart. Really like it. I had suspected the market. So let me tell you what we did here. What happened here. So remember I told you if we get distance and we get separation like this, one of 2 things is going to happen with this market. It's going to drop back to the downside, maybe near Kijinsen, maybe to the fractal level, right? That's one thing that we suspect it would do, right? And what's the second thing that it could do? Anybody know? Is that divergence? I don't see it. But what could happen other than the market pulling back off of this big C-clamp separation of Tenkan-sen, Kijinsen? I know one person in here knows. Okay. I don't think anyone knows. What did it do right here? What did the market do right here? There you go. It could either pull back or range. So we suspect it most of the time to pull back. All right. But it could range. So it stayed in this area. And then it waited until Tenkan-sen and Kijinsen caught back up to each other. So you don't want to go against this. So you don't want to be going long really at this point. And I mean, you like here, there was a long opportunity, but you're not going to catch every single trade in the market. All right. So on a daily time frame, I never would have taken a long right here ever. I wouldn't have taken a long even if it broke Tinkinson right here, because first of all, we were flat ranging and we had too much distance here. But once we saw the angulation, which started here, then we corrected. And then finally at this point, when they were closer together, then I would think about trading this bottom of this range to the upside, because everything on Ichimoku was bullish. So Ichimoku had a nice cloud that was angling to the upside. It's got some distance on A and B, but everything is starting to angle to the upside. And then also you had your crossover was bullish. Then you started to get great angulation. And then Chiku span was above price. There's nothing to hold this market back from moving in even higher. So how can we catch this trade? I mean, we just had this big move here. Easy. We can catch this trade in one way. We can catch the bounce off of this level. All right. So it could either pull back to this level or pull back to Kijinsen. We watch this pull back into here and move higher. And that's where we catch our trade. I see this market still continuing to the upside. I don't see any weakness yet. Doesn't show a lot of volume in here. But I don't see any weakness on here. So therefore, I would look for the market to correct here and push higher. Where would our targets be? This is a big target here. I'm going to just give you the end values, the end value. So if we do get into a trade on the bottom here, down here, we could look for the market to push up to the 1-to-1 level, which is a measured move, which is also your end wave, not your end wave, your end target, your end value, which would be this level right there. Does that line up with anything? It takes us up to this top right here, right? See that resistance point, see that resistance, this resistance. So we're saying longer term, the market could push up to this level. Now the market's not going straight up there today and tomorrow and it'll be up to this level. It's going to have some pullbacks within that point. So as long as we stay above Kijinsen, we have angulation on the cloud, we have a bullish crossover, we remain bullish. The market pulls back to your fractal levels, you could catch the bounce off of these levels. We're looking for this market to push to about 108.868 is what we're shooting for overall. All right, so that's what I'm thinking with the Aussie New Zealand dollar. Let's go to Aussie USD. Aussie USD. So the Aussie USD started to see something on this thing, and then it broke. Kind of like a Y wave, but not real good. All right, kind of like a Y wave, but we're a little bit flat here. You could see the cloud is flat. You just got a crossover that's bullish, but Chiku span's inside of this price. I wouldn't be looking for anything right now. All right. What I would wait for is for the break below this level, because what we do have is the N wave possibly continuing to the upside, right? But we still do have a bigger N wave here that would have to continue to the downside. So I don't know where we are unless we break this level right here, or else we break this level. So we're in between two levels that I want to see the market break, either this level or this level. All right, so basically this would take us for a Kumo breakout. But the thing is, I wouldn't trade this Kumo breakout either, because look what's happening. You got a cloud that's bright, so bright skies. Chiku span's above price, and then if you're getting a breakout with a crossover that's bullish, you got mixed signals. I wouldn't take that trade. I wouldn't trade this break to the downside. All right. So again, I always wait for the market to prove itself. Prove it to me that you're going to the downside. Don't just jump on the train because it breaks to the downside. Prove to me that you're going to the downside. So the way it could prove it to me, it would violate this structure right here. All right. And I don't see it violating this structure because we don't have the signs, but it still could. But I would wait and then test and then short at that point. That's where I'm shorting the market. If the market doesn't do that, stays in this range here, then I'm going to wait for it to break out of that range. If it breaks out of this range, then I'm going to be able to, I would trade the Kumo breakout at that point. And the reason being is because if Chiku span is above price and I got a bullish crossover and my future is bright, I would trade this breakout, Kumo breakout, to the upside. If I was afraid to trade the breakout, because that takes me off of my 3 level and takes me closer to the 2 level, and I never trade the 2 level, and I don't trade the breakouts myself either. All right. What I wait for is for the market to test itself and prove it to me that you're moving to the upside. All right. So it would have to violate this structure right here. So in the process, because we're flat right here, and actually, what are we doing? What's holding us from going lower? Does anybody see or know? What's holding us from going lower? Kumo support. Yeah. What else? Okay. Here's what's holding us from going lower. The thing that you guys never look at anymore. You just fell away from these. See that level right there? What is this level? So let's go to the lowest fractal level right there. That's what's holding this level, this market right now, is this structure. This fractal right here is holding this support. And the market's failing to close much below that level. All right. So therefore, this fractal level is holding us, along with the crossover that's bullish and the skies that are bright and Chiku span that's still above price mainly. So therefore, the move to the upside would be more likely based off of that. Now, if we can violate that fractal and close well below, then we may see the market push down to this level, push down into this area. But the way we see things right now, it's kind of hidden to the upside. All right. But I never know, so I want to see, and again, what I would wait for is the break and then the test of this fractal, because we would have violated this level, and then now we want to see if it's going to hold this level, which is the last fractal that it would have to violate in order for the market to change structure. So if it's going to, and to change major structure, the whole trend, it would have to violate this level. All right, but to change out, to get out of this flat level here, we violate this fractal, and then we bounce on it to the upside. And then back take a short. So what I'm saying is this. I think I explain myself too much and get too deep with this stuff and maybe start to confuse you after I explain so much. But so we're saying this fractal's holding us, right? But that's for the upside. That's holding us from going lower. But if we break lower, we're going to break this structure right here. This structure. So if we break this structure, we're going to come back and test this structure and short this structure. But if we can't break this structure and we don't violate here, then we stay in this range. All right. And it could become P wave because it's close to getting to that, because you have this doing this right now. So you could have a P wave structure here and then a break to the upside. All right. So because in a break to the upside, because we moved upside, then we're starting to form a P wave here. And then we break to the upside, which would keep this N wave intact, right? And then we would shoot for targets. Where would we shoot for our target? Where would our targets be? I'll draw one target on here. Let me see. This is the low. This would be the high. But the high can't come after the low. So this would be the high and the low. So let's mark this target where this market could be going to if we're going to see it go high to the upside. Boom. And then here. So 1 to 1 gives us this level at 74, 174. All right. And then if we can violate that, we're pushing towards this top up here. All right. I want to see the market break out of this supposed P wave formation that it's falling into. Let's draw that out nicely too, so we can keep seeing that on our chart. We want to see that on our chart. Let's get rid of this fractal zone. Somebody's asking me about the zone. How do they know how to trade the zone or where to trade the zone? I'll talk about that when I get to a good zone. So currently, this is what we have, right? So we have that lower support trend line and this upper trend line, which would start to form a P wave when we get it together like this. So we could be starting to see a P wave develop, and then maybe it breaks to the upside, because a lot of times it's going to break to the direction it started from. It started this way, then P wave, then move to the upside. And a lot of times a P wave at a top or a bottom, then the market breaks lower. But I don't consider this a true top, because I would consider that the top. all right, over this level, but continues the way it goes. So I don't see much yet till we see those things happen with the market. So we're on CAD Swiss franc. CAD Swiss franc, a lot of these markets don't look great Ichimoku wise. All right. I do like this one a little bit, but my issue with this one is we broke this fractal here. But we have strong support. It's trending bearish to the downside, but the current move is bullish. All right. Because here was the bearish move, and then now we got a bullish move. And also, not quite a P wave. Maybe starting to develop that. Let's look at this. We could be developing into a P wave formation. All right. So what I'm seeing happen here, maybe we find support at Kijinsen. Let's see what Kijinsen does for us. All right. And we also have a fractal level, couple levels. Let's see if any of them are relevant. So this is the low fractal. That's the low of this fractal. This fractal would be a zone, but I'm not going to mark it because it's too big, because it would take me here. I don't like to mark big zones, but that would be the zone. All right. And then you have support at Kijinsen. So in this area, we could suspect to see the market move higher. Let's say the market pushes a little lower to one of these two levels, the Kijinsen or this level. Then we would be shooting for the market to move higher. And it would be shooting for this level. 1, 2. Let's say we're pushed to Kijinsen. That's right here. Even the low of the fractal zone would push us here. So we would be looking for a 1-to-1, which would be our N value, which would be right there at about 74802. So if we could get our bounce here and then move higher, we just got the Kumo twist. Our future's bright, but it's a thin cloud that's not really angling. All right, so we don't have angulation. Kijinsen's flat. Tenkan-sen's aiming to the downside, but that's because we're in this little correction. Chikou span is above price. It did violate Kijinsen, but it fell back below Kijinsen right now. I want to see that back above Kijinsen, but we are remaining above this price, which is good. And we just pushed into this fractal level with Chikou span. All right, so we may see a good bounce here. So we want to see price action show us the move here. There's no divergence on this chart. All right. So that's good. So we could probably see the push up to this level. And then I think that level takes us closer to here. See, yep. That takes us up to this top in this area. So if we get our move off of this point. All right. CMO is gray. Not for me. Actually, what am I using? I thought I had CMO mark. Yeah. CMO's not gray. It's red for me still. So what I would wait for on this is for CMO to give me a green signal. What do you have your CMO set to? Because it should be set to 5. Let me make sure I'm set at 5. I should be because I haven't changed anything. Yep. So what you want to see the market push down to this and then get a green CMO entry off of this level. And CMO rarely fails me. I mean, it rarely fails me. And I haven't been talking about it much during this session, but guys, CMO does rarely fail me. And I get a bounce off of this level. That's what I would wait for, is for that CMO to turn green. And I take that first green candle. So like if you're talking about trading with CMO, let me show you what your entry would be. Like if you're looking for a short entry because you're below the cloud, crossover is bearish, and your Chikou span's below price and so forth. So we want to short now right here. So what we've been looking for is this market pulled back. You got gray. So gray is like it's not a signal. It's nothing. You don't have anything. There's an entry and that's it. So you got a gray candles, but then you got a red candle. That's your entry right there to short the market at that point. Okay. And you would only look for shorts at this point. So if you were going to short, you would short here. You would short here. You would short here. and you would short here. And you would have had all of those trades would have been winning trades. Okay. So currently, if you're thinking about CMO and looking at everything, we're still bearish. We don't have no opportunity to make a move. Everything on Ichimoku is showing me bullish, so I want to be in line with that. I'm not going to take a short. I'm going to wait for. I never want to trade against the strength of the market, and the current strength on this candle is green, is red, bearish. I'm not going to trade long against this candle until I see momentum come my direction. CAD yen, it looks like it's flattening out, all right, because look at this crossover here, flat clouds, thicker flat clouds. That shows me there's no movement here, but we are pushing to some levels. So let's talk about this. Again, here was a big C clamp. The market found the top and then retraced all the way back down to some levels. So where did it retrace to? It retraced to 2 levels. It's pushing to 2 levels. Again, another fractal zone that's kind of big, and I don't like using big zones, but it's not super big. And it lines up with the flat cloud and Kijinsen. So what we want to see is a bounce in this area. So what we're going to look for is the bounce and then a green CMO entry. All right, so with your green CMO entry, and if you're not using CMO or you don't have that, you're just waiting for price action at this level for a long entry. So I wouldn't short this at all because, first of all, Ichimoku signals are bearish. Are bullish. And I'd have to wait for a crossover, Chiku span to get below price and price to violate the cloud in order for me to think about the short opportunity. Now, of course, the market could start ranging, but we're going to look for a long opportunity here because we have a beautiful zone. We have Kijinsen lined up here. Let's see what the price action does and then gives us a green entry on CMO. So the next green candle, you should be long on CMO, not the next green candle on the regular chart. The next green candle on CMO. These candles are set to change with the CMO. And I also can set them to change with the GAN and therefore take CMO off, and we could change. So we would wait for and GAN usually gives almost the same entries as CMO. So CMO just turns gray, GAN doesn't, but sometimes the entries are the same. So let's say we'll look at a chart where we have trade setups. Because we don't have one here and we don't have one here. CMO would have gave us an entry. GAN would have gave us this breakout right here. We would trade the breakout. But if we went to CMO, take GAN off, right? Put CMO on. So GAN just turned green right here. Let's mark it. GAN turned green there, so did CMO. So let's go back to GAN. GAN turned green there, so did CMO. That shows me what the momentum is bullish at this point. So only thing with GAN, look what GAN did. It stayed green all the way to this point, right? So that's where GAN stayed green. So therefore, if I didn't catch the breakout trade, then I don't get any trade because if I'm following the system, right? So with CMO, I get a difference. CMO gave no trade here because we were below the cloud. So we take the breakout trade, but if we don't take the breakout trade, then we wait for a new green candle. Here were 2 gray candles. So the next green candle, we're going to get into the market. Boom. That's your long. Your crossover is bullish. Chiku spans above price and price is above the cloud. And that's your entry right there. And you're also bouncing off of your fractal level right here. Right here. That's your fractal level you're bouncing off of. These fractal levels are vital. And they continue to make support and resistance levels, all right? And this is where you would have bounced with price action. So if you didn't have CMO, you don't need CMO because what you would have done, well, I do love CMO, but I would have traded the rejection candle off of the fractal level because we broke out of the cloud. If I don't take the cloud breakout, then I take this correction here, and then I trade. And then we would have been looking for targets. You would have looked for your target just like this. But this exceeded the target. You could tell that. This was our target. It well exceeded the target. So we would have got in the trade here. This would have been our target. It exceeded. I don't get out of the trade when we hit the target, especially on a monster candle like this or a strong candle like that. I'll put my stop loss under that candle, and then I'll give this a chance to run. It pushed up to the next level, and then it pushed back down. So therefore, that's how you're going to be using CMO or price action. So people that don't have CMO use this price action with this rejection candle at the fractal level after you broke out of the cloud. These are easier signs to see because it's telling you directly what's happening. But sometimes the market gets into areas where you can't really tell what's happening. So you just have to be patient and wait. There's not always going to be a trade, not always going to be an opportunity. Every week won't be a trade on CAD yen. Okay? But this week, I think there is going to be a trade on CAD yen. So what I just showed you now, you're going to wait for the next green candle to enter long off of a CMO entry off of the CAD yen. Or if you're not trading that, again, price action at this zone. So someone wanted to know how to trade the zone. So if I'm trading a zone, you got to first learn to trust the zone. You're not going to be able to trade a zone if you don't trust the zone or you don't trust your system. So it doesn't matter if I show you these zones or not. If you don't trust it, you're not going to trade it. So I never put an entry. Well, let me take that back. I do this different when I'm trading day trading and when I'm swing trading. Swing trading, here's how I trade these zones. When the market comes down to this level, there's two things you could do. You could just wait to see if it's going to push lower. At this point, you don't put an entry yet. You're going to enter on a buy stop, meaning the market will be below this level. So therefore, if the market pushes to the middle of this zone, this is the market, then I put my buy stop at the top of this zone, and I want the market to come to me. If the market pushes down below to the bottom of the zone, or maybe the Kijinsen, I'm going to move my buy stop down to here, to the middle of the zone. I've just reduced my stop loss in half. My stop loss is always going to be fractal levels, Kijinsen, the cloud, or the previous candle. So in this case, it would have been, I would have started, if I take a trade at this zone, it's going to be a little bit below the zone. Since Kijinsen is right at the zone, I'm going to be a little bit below Kijinsen. So therefore, I start with a stop loss that's from this point to this point. But if the market pushes to the midpoint, or I'm sorry, if it pushes to the lower point, then I now move my entry lower while the market is below me. Therefore, I want momentum to push back up into my trade, and then I take my trade. All right. And I keep my stop losses tight because if the market has momentum and it's going to go my way, it's going to go my way. I could show that to you 1,000 times and show you that most of the time it will work that way. It either is going to go or it's not. There's no need to be sitting in a trade that's not going to go, and you're sitting there, more losses, more time consumed. And the next thing you know, it does take a loss for you. And you sat through a trade for days, weeks, and nothing. All right. Either it's going to go or it's not. And some people in here could probably attest to that because I know some people do know that and do that. So again, we're looking for a long here. And I showed you where the targets were and everything. So let's move on. All right. So this starting to show some divergence here because this top, and this is where the market dropped. We already had divergence. The market dropped. How far is it going to drop? Let me show you the divergence first. We went from this point, which is lower, a little bit lower, but on here it's higher. Actually, sorry. Let's go from, because the divergence kicked in here. This was a divergence right here. Let me show you. I'm going to change this. This was the divergence. See that? And then the market dropped. So I think that divergence kicked in. So I'm not going to use that high. I'm going to use this high. So if I'm using this high, then I probably don't have divergence. Let me show you. See? That's this high. Now when I go to this high, there was already divergence that already kicked in. So therefore, and it dropped. So therefore, there's no divergence on this chart. And the market dropped here. Where did the market? Okay, so here's what's happening right now with this chart. So based off of Ichimoku, this is still bullish. There's levels that can get us still moving to the upside. One thing is happening here. Two things are happening here, really. First of all, the cloud is flat. We don't have much momentum. Cloud's very flat. and starting to roll down to the downside. We're getting ready to see maybe a Kumo twist. The next thing is, first of all, what are we doing? Somebody tell me what we're doing. Anybody know what we're doing? Yeah, box. So we're trading inside of one candle, right? We're trading inside this big mother candle. So basically we're consolidating, we're ranging. So therefore I go to a lower time frame and trade these upper and lower levels. But if I don't want to do that and I just stay on the daily time frame, we first need to break out of that box. Then something else is happening. What else is happening, guys? I've talked about it already today. What else is happening? I could consider that the waterfall. It's at the top. All right, but I'm not talking about that. But yeah, good eye. But I'm actually talking about something else. Two other things. What are we breaking? What are we breaking? We're breaking fractal levels, bare fractal levels. What are we bouncing on? We're bouncing on fractal levels. Guys, get the fractal in your brain, in your head. Think fractal all the time. It's one of your main levels to trade on the market. It's not going to happen all the time, but it's going to happen a lot of the time. Currently, we are bouncing on this fractal, small, tiny fractal zone that is here from this fractal. The market broke this fractal, returned to this fractal, returned again, and then dropped. It gave us an N wave to the downside. How far is this N wave? Let's see, because we may be at level already. So this market could push even lower down to like this 122.812 level, which would then give us pretty much this support right here, right? And it's a little bit higher than this support, but it's going to be right at this support level here if it drops that low. All right, which would mean this leg is going to be equal to this leg is going to be equal to this leg. So we would see this drop down to this level. It has to get through what? The 2 level. If it's not going to get through 2 level, we want to see it violate back to the upside, because we have no trade. Everything is bullish right now. All right, but the structure has started to change a little bit, and that's just because we're having a correction. But we could still see it drop lower. Then the market could get flat. The market could continue to the downside. The market could continue to the upside. We should have already been looking at this. Well, if I wasn't trading Ichimoku, I'd have been short already off of the fractal bounce. So Ichimoku hinders me to trade this move here. So therefore, I'm going to wait. So what's a level that can hold us, that can keep us from pushing even lower? This next fractal level right here, because it's also lined up with the range. All right, so we could see the market come down to about this point, or maybe down to our level here. All right, or if it doesn't break out of this zone here, what we're in this area where we're inside the mother candle. What I would actually do is go to the lower time frame and look for a bounce off of the bottom here to move higher, because then we'll be in a line with what Ichimoku is showing us, which is bullish. Now this crossover is getting ready to happen, so that may start to change everything. But Chikou span is still above price, and it needs to violate price and Kijinsen for everything to change for me. All right, so until I see that, I'm going to stay with the upside move. This is just a correction here. All right, but what it's also lining up to be, also, what kind of formation is that? What kind of formation do you see on the chart? Not really a P wave here, because reason being, let me show you. There's a reason why we don't have a P wave here. This is flat. So we're starting to see a descending triangle pattern, which a lot of times breaks out to the downside. All right. So we could be seeing that, but we're inside this mother candle. Until we violate this mother candle, then we have no true direction yet, because we're just trading inside of a box. All right. So that's what I see right now. If we violate this low right here with this fractal, we probably push into this area. If we violate that, we're pushing down into this support and resistance level. All right, then we'll see what the signs are. But I don't, even though Ichimoku is bullish, I don't have a bullish trade yet. I would trade bullish once we break this point, because the reason being is because we're flat here. So Ichimoku's trying to change direction with this crossover here. But look at the cloud also, and look at the Kumo twists getting tight. So this starts to show, the market shows me things before Ichimoku shows me. Ichimoku just starts to show you this, which could mean we're going to be flat here. It doesn't even have to violate this level. We could just be ranging in this area. We could even range up to this point and just be in a range here. But the price shows me this before Ichimoku shows me this. I just align Ichimoku with what I see on the price. And if they all align, then I get into the trade. They're not aligning right now. Okay. So therefore, I just wait on this. I wait for more confirmation of the direction of the market. We're now looking at Euro Aussie. Euro Aussie on the daily time frame. Not in love with this market either. Look at, we're inside basically. Again, this fractal level held, moved upside, then we violated it. Then we had a big bullish engulfing. All right, so we haven't discussed a lot about the order blocks, so I'm not going to put them in here too much because I don't want to be going against what Ichimoku is showing me, because we have a block here. This is too big of a block for me, though. I wouldn't probably look at that block. And then off of that block, we did have some other blocks down here. All right, there was a block right here where the market bounced on. And then actually you have another block right here. All right, I don't want to mix up too many concepts with this stuff to make everything more confusing, so I'm not even going to talk about the order blocks. But look at, what's the cloud doing? The cloud is kind of flat. Your cloud is right here. So if you want to see what the market is doing, then make levels on your cloud. If your cloud, let me mark this, cannot violate this level to the downside and doesn't violate this level to the upside, your market is going nowhere. You're in between here. This market is flat. It's ranging. There's nothing for me to trade right now. I needed to break out of this area. Other than that, I don't have a trade set up for you at all. So Euro CAD looks good. This looked like it was breaking to be a Y wave. All right. And that's what it is. So it could push down to this area. All right. But what we see happening right now, looks like it could start ranging based off of the cloud formation, because you got a crossover here and then another crossover and then a flat cloud. So I don't know if we'll reach this level, but what we see, we're still bearish. All right. Is there any divergence anywhere? There's no divergence. All right. So this divergence right here already happened right there. So you had divergence here and it pushed higher. So now we're looking at where we are now based off of this low and this low. It's the same. This is a little lower than this one. Here, it's a little lower than this one. It's lower than that one, period. So we have no divergence. We have a crossover that's bearish. Our future is dark. So we're pushing up to a level. Maybe we can look for a trade at a level. So the level that I'm looking to short this market, I would stay short. Chiku spans below price. This is still a bearish market. Pretty much bearish. I would look to short at this level, the highest. Maybe up to Kijinsen. But my zone, my actual zone, if we violate this zone right here, because this zone is what I would be looking to short. If we do violate this zone, then watch for the market to test this zone. All right, but I would be looking to short here. So what we want to see based off of trading with CMO, we want to see the market push into this area and then give us a red CMO. So if we were trading CMO, right, and we were looking to short the market, we would take a short. And here we wouldn't have shorted it. We wait for the breakout. We would have taken a short here. So we would take one short trade here, CMO would have gave you a little bit of profit. It would have gave you good profit because you wouldn't have got out of your trade because you're going to be tight, right? So you're going to be above your candle just a little bit with your stop loss. But your next CMO entry was this one, short. And your stop loss again above the candle. All right, you could have pushed to this level, but I really don't see a need to. Because if you're shorting here and the market comes back to here, you don't have the momentum you need. But instead, the market kept going. So you would have entered here and you would have also entered here for 2 short trades off of CMO based off of the direction of Ichimoku. And you would have got a good trade. All right. And you don't even you don't even know the levels. You're just trading the CMO. Let me show this to you. Let me prove it to you. I like to prove what I'm talking about. I don't like to just talk trash to you. I like to prove what I'm talking. Therefore, when I'm talking, then it's no more trash. It's true. So the market's bearish at this point. And I can go anywhere on this chart if you want me to, but because I'm not setting this up. I'm doing it what it is. You would short, starting at this point, you got a crossover. That's bearish. You're below the cloud. Chico span's below price. You're shorting now. The market's bearish. You're going to short every CMO. One CMO entry short there, you would make profit. Your stop loss is here and never came back. The next CMO entry is here. You may get stopped out here, but you make profit first. So the market doesn't even come back to your level. All right. So that's 2 good trades. The next entry would have been this level. You would have still made that profit. The next entry is this level. You would have still made that profit. The next entry is this level. You would have made this profit. Then the next entry is this level. You make good profit. The next entry is this one. None of these have stopped me out. Not one. The next entry, and I'm using the top of the candle as a stop loss. And then the next entry. And I don't have another entry until I have an entry here. That's a stop out. This stopped me out. And then I have another short here. So I just took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades, and I lost 1 trade. These other actually, I mean, you shouldn't lose this trade. This wouldn't have been a loser because you get profit here. This wouldn't have been a loser, you get profit here. This wouldn't have been a loser, you get profit here. So none of these would have been losing trades. This would have been a losing trade, but then you recover. And look how quick we process. So there's 2 trains of thoughts here. For me, this is an indecision candle. I still take the trade on the red candle. But had I had my stop loss above the candle, I might have gotten stopped out. Some people would have decided to put their stop loss up here. Then they wouldn't have got stopped out. They would have made the profit. I don't feel a need to put a stop loss up here because the trade setup that we're using, if you're talking about entering the market here, here, what are you entering off for? You're entering for momentum, right? So if you're entering for momentum, the market shouldn't come all the way back up here. You no longer have that momentum that you're looking for that CMO gives you on this candle, or on this candle, or on this candle, or on this candle, or this candle. You no longer have the momentum if this is red and then it pushes all the way back up. It will then turn gray or green, and then you wouldn't have that trade. So you don't need to have a stop loss up here. Once that candle turns green or gray, you should be like, okay, I'm out of that trade if you don't have profit. So if you get into the entry on a red candle and then the next candle doesn't violate your low, you're not making profit and it turns gray, I would stay in it to my stop loss. I pretty much stay in it to my stop loss. But if it turns green, I'm out of it. All right. And that's how you're going to eliminate, and you're going to get more wins and tighter stop losses and bigger wins than your losses. And that's how you stay in this game. I know I'm talking forever, guys. I'm sorry. Oh, I do this all the time. I get caught up in so much stuff and get caught up to explaining this stuff. But let's see where we are now. So let's say we're talking about trading now and our entries, what we would be looking for. So like we said, we're looking for our next short. Yeah, I do love what I'm doing. We're looking for a short. All signals are bearish. So we're going to take, we also have the levels that we talked about. So I'm going to draw the top of the fractal level here. in this fractal level because this fractal level. And when you're trading, so here's how you determine your fractals. We're not determined to bounce off of this level or this level or this level or this level. We're determined to bounce off of the bottom fractal because we're bearish. So we're going to trade the bottom of a bearish fractal. If we're going long, we're going to trade the bounce off of a bullish fractal then at that point. So when we're looking at this short here, we want to see CMO give us a red candle. The next red candle, we're short. All right. CMO gave you a short right here. You would have been in the short already. Everything on Ichimoku was bearish on this Euro Swiss franc. This was a bearish market right there. Bearish market. TK crossover is bearish. We got flat here, but what do I tell you guys? When we're trading the system or anything that we're talking about, we remain short until the market closes above the cloud. All right, when you're looking at trading this system. Now, when we look at the market overall, I would have said if we bounce on this level, we probably will see the market move higher. We failed to bounce on this level or this level. So I would have started to tell you guys, well, we broke structure. We broke structure. If we could bounce on this level, and I would have thought maybe we're going to bounce, but I never got a green candle. It stayed red, and then therefore it's bearish. It stayed bearish, closed back below Kijinsen, we're short. So don't let this confuse you. What confuses people is that we get this crossover, all right, and we figure, okay, the market's changing. It could be changing. It might be changing. Chiku span broke above Kijinsen, but then it came right back below, and therefore you see what happened. The market was soundly bearish. You let a few candles change your mind to bullish. Stay with the direction of the market until it changes. And a change means we break and we bounce. So that would mean we do this. Structure is here. We break structure, we bounce on structure, and we move higher. Now we can start to change our bias. And then we break the cloud and everything. But in this case, what happened? We broke structure, and we broke right back down through structure. Structure had no meaning to us. We stayed with the downside. So don't change your bias. And that's why when the market's even up here, you can still be looking at a short opportunity. But it all depends what's happening with your structure also. All right. Where am I? So we're pushing down to this bottom here. Let's see if there's divergence on this thing, because we're pushing at a double bottom. I always check divergence at a double bottom for sure. At a double bottom, I want to see if there's divergence. And if there's divergence, then I kind of start to think the market's going to change direction. There's not major divergence on this thing, but there's some. So this level pushed up to this. There is some divergence here. We could see the market start to move up a little bit. Our cloud has started to roll over and become thinner, and now we're in this little area here. It's flat. So in order for us to think it's going to continue lower, we want to see the cloud span A close below that level there. Therefore, we would see that. And we don't have to change anything. I'm not telling you, look, take a long here. If I took Ichimoku off the chart, I would be looking for a long here. All right. Based off of Ichimoku, the way we're talking about trading Ichimoku, we're going to wait. All right. So we're going to wait for that to give us signals from Ichimoku. But based off of what we see here, we could be pushing up higher. Now, what I would also tell you is if we violate this level, then we push back to this level in short. We trade off of the structure. All right. So now we may see the market push off of this level, push higher. At that point, we're going to wait because we could be falling into some fluctuation level. All right. So then fluctuation could give us stuff like this before we clearly break the cloud to the upside. All right. So we could find support here. If we violate this level, make sure we violate, test, and then short. We'll still be in alignment with this trend. All right. And we do have some divergence, so we could see a push up higher. So those are the things that I see with this market right now. Any questions? I don't have any questions. Let's move on. All right, so euro pound. Euro pound is a bearish market. Now, what do we have? What's the problem here? We have distance, too much distance on Tinkinson, Kijinsen. Kijinsen is flat. There's big distance between the two. All right, and Kijinsen, Tinkinson is starting to roll up. My cloud is thick. It's not really rolling yet, but it's flat on span AMB, pretty much flat. So we probably more than likely see the correction. We're starting to see that. Now, if we don't get the correction, what else do we get? We get the range. All right, so we could either just range in this area until they catch back up. But the market more than likely is not going lower than this point while these two are this far apart. All right, so then the one thing it could do is stay here in range till they catch up or pull back. So if it's going to pull back and we're bearish, so we're going to look for a short trade. So we're going to go to this point. This is our fractal level. Lines up close to Kijinsen. There's another fractal level I want you to pay attention to also. See if we push back up to this level. If we get back up into this level, look for your short. You can look for your CMO entry, which will give you a red candle, or else look for your price action entry short at this level. But also pay attention to this level. This level's kind of giving me issues. See if we bounce off of this level. All right, if we can violate this level, then look to push up to here. All right, but if we can't violate this level, we're going to sit here and then until they get closer and until we see what's happening with the structure. We're still bearish, so I would look to short at that point. So I want to see the market. I'd love to see the market get through here so I can short at this area, our Kijinsen and so forth. All right. But where it is now, we need it to push at least to this level. And we got a green candle. You shouldn't be short yet. And the market is bearish, right? So you should be short. Any questions? Let's move on. This market is getting I don't love this structure already. So we got a crossover here, and then we violated downside structure, and we knew we would because we were a little bit of distance, so we expected the violation. We wanted to come back to structure again, which was this fractal. There's a zone here, and I don't want to mark it because we violated it already, so it doesn't matter. So I'm going to make the low of the zone. Actually, I'm going to use this fractal and this fractal to make the fractal zone. I'm not going to include this high, so I'm going to use this high for the fractal, and I'm going to use this low for the zone. Understand what I'm doing? So I'm using two fractals to make one zone. Therefore, I'm going to use this zone. This is where we look like we're bouncing. We're still bullish here. Our crossover is still bullish, and Chico span still above price. So we're still bullish. We can see the market push higher. What we need to see now, guys, is this. We need to see a green candle right now. I would trade the bounce off of this level. So the next green candle, and actually, like if I'm trading price action, I would enter the market here with a stop loss slightly below. So I would enter at that point and look for a long. Where would my targets be? We'll talk about targets in a moment. Overall target would be pushing all the way back up to here. That's longer term. But also what we're looking at now is your CMO. You get a green CMO candle, that's where you enter long. Okay. So what I would keep this as my stop loss right there below this level a little bit. Then my next candle opens, it closes green, I'm in the long trade. The next thing that we're going to look for is our target. So if this is going to be the low, we're coming off of this low. So we're coming off of points 1, 2, and 3. We're going 1, 2, and 3. So this is the low right now. So that means 1 to 1, we'd be shooting for this area pretty much. So it would take us to this resistance point right here, right there, pretty much there. So let's go into this area. We're going to shoot for like 132, 667, 132, 803 in this whole area here. So we would look for the market to move up higher. We need to, first of all, break the cloud and then break level 2. Level 2 is right here. We break level 2, we continue higher. If we can't break level 2, then we may be range here. But this is where I look for a long trade right now. Now, if the market decides to close lower than this zone here, than the cloud, if it breaks below the cloud and closes, then that's off for me. All right, so then I would wait to see what happens if the market gets to this level. And that long trade would be off the table. Understood? Everybody got that? And at this point, there's no divergence there. We had divergence here. See that? So when you see at this bottom, now we wouldn't have traded based off of Ichimoku, but some things let us know we were at a bottom. Let me show you again. I'm getting lost in this, but I'm going to show you. So we had this bottom right here, right? So we had this low and we were getting too far apart, we kind of think, and we're flat here. So we kind of start thinking this is the bottom right here. And we don't see any divergence yet. So we're like, okay, so this distance is too much. Let's see what's happening. All right, so they're trying to get closer together. We're flat here. Not really divergence though, right? It stayed flat. And pushed all the way back up. It didn't really diverge. It was basically just showing increasing demand. All right. And pushed back up to this level. So we knew we pretty much had a bottom with this separation. All right. We didn't really have divergence. I wanted to show you divergence at that point, because then you know you have separation, divergence, and a thicker cloud. Now we kind of really know what's happening. We're starting to roll over. We're thick and we're flat. So that's how you start to realize you're at a bottom and a top and so forth. But where we are now, and you could see that bottom remained, and we broke all the way back up to the upside. And actually, I could have came back and showed you lower when we did come lower again. The second time we did have divergence. At this point, we didn't have the divergence, but we were showing demand coming into the market. Then we had a drop here to the bottom level here. At that point, we did have the divergence, and the market pushed way up higher. Based off Ichimoku, we wouldn't have traded that divergence. But when I'm trading the market regular on a daily, like day trading, I don't have anything on my chart. I take Ichimoku off and I trade levels. All right. When I see a double bottom with divergence, I always trade it. I always trade this double bottom with divergence to the upside when I'm day trading, scalping, or whatever. That's what I'll do. If I have a support and resistance level, we get to the bottom, like I see this double bottom right here. I'm always looking for a double bottom to see if there's divergence. So you got a bottom and a bottom. Is there divergence? There's slight divergence. All right. Because this is moving a little bit higher. So from here to here, it's probably even. So you wouldn't have divergence. But that's what I look for, a double bottom with divergence. And then I take, now there, I wouldn't have traded this divergence. You see what I'm showing you? Why wouldn't I have traded this divergence? Anybody? Why wouldn't I trade it long here? This divergence right there. No one knows? I always say it. I wouldn't have traded that divergence because this divergence, right, Rail. I'm Bay. I don't know how you pronounce your name. Hopefully I said it right, but I appreciate you being here and talking up, letting us know. But yes, there's no level really. If this did come down to like this was a level and then I had this divergence, I would have traded long right here. All right. But there was no level. So I'm not going to trade the divergence. I need divergence and a level of support to trade that. All right. But now when I have a double bottom, that's a level. And if I have the divergence, I trade it. In this case, there wasn't divergence, but I had the double bottom. All right. And I'll even trade this type of a level. Let me show you. I don't know if there's divergence here yet. Let me look. But see how this came back? It's a double top real quick. A quick top right here. All right. So these are, I call these even right here. And let's see if there's any divergence. No, no divergence. But if there was divergence, like this was aiming down already, I would definitely have shorted that level. And also this level would have lined up close to a support and resistance level, because you could see this on your right, on your left. See? And that was a nice little zone here. But I wouldn't have had divergence. But would I have traded that blindly? It's only if I'm day trading or something like that. And if I don't have Ichimoku on my chart, I could trade these levels a little bit better. All right, because basically what I trade, here's how I just trade the market. Remove these drawings. All I wait for is this. I'm going to show you how many trades I could catch right now. So this determines what's happening for me with the market. We're breaking bull fractals. We're heading to the upside. So all through here, we're breaking, guys, if you just realize we're breaking these fractals, these upper fractals. We're not breaking these lower fractals all the way up to here. So from here to here, I should be long. Well, what I'm going to trade is two things. I could just wait for my CMO entry. Let's see how good the CMO entries would have done just there. So once we break the fractal, then we know we're going. So we trade a CMO entry. Every green candle we're going to enter long on. Just to that point. One trade, we're going to win that trade. Two trades, we're going to win that trade. Three trades, we're going to win that trade. Four trade, we lose this trade. Five trades, we're going to win that trade. And then six trades, we're going to lose that trade. So 6 trades, 2 losses, 4 wins, small losses, big wins. That's how it is. Now let me show you another thing. Am I going too far? Am I getting way off track? I always do, but so I'm going to trade the direction based off of the fractal breaks. All right. And I'm going to trade the CMO entry, but I'm also going to do this. I have nothing on my chart. I don't need anything on my chart. I'm going to trade these fractal bounces. One bounce there. This is the main fractal. Doesn't come back here. Here's another fractal with a zone. I'm going to make it into a zone. I get another trade here. So the market breaks, comes back. I get a trade, break, come back again. I get a trade. I'm going to mark the next fractal here. And it's a big zone if I use this one. So I'm going to mark this fractal. I probably look for a long here and I don't get it and the market drops. So as the market drop, here's where I get confused. I'm going to show you where I do get confused. We broke structure. So now I'm thinking the market's going to bounce on the lower fractal, right? Because it's going to continue. So I'm going to short there. And I might get caught up, but I don't know. CMO give me this, I still get the trade. I may lose a trade here, but then the market changes back to the upside. And so I'm not going to trade anything in here because I don't know yet. And I can't call this a bounce off of this fractal level because that's not the fractal I want to be bouncing on. So therefore, I don't know what's happening all through here until we break this level. Once we break that level, I realize what's happening. So then again, I'm going to start trading the bounces off of my fractal levels, right? My fractal level bounce. My fractal level bounces. Mark this fractal right here. And then the next fractal right here. Here's where I don't get the trade, or maybe I lose a trade, but I win 1 trade, 2 trade. Now, if I'm not getting the fractal bounce because they don't always come to the fractal bounce, then I'm going to get my CMO entry. When do I decide I'm going to be long on the CMO entry? I decided after we got here and broke this level. All right, so now I'm going to wait for the first correction, which would mean we turn gray and then red, or we turn red and then back to green. So I'm going to take the first CMO entry. The first entry, not the second, the first. That's 1 entry. I would have got a good trade there. I got a good trade here. I got a good trade here. And I got a good trade here. 1, 2, 3, 4 in a row. So you figure 4 trades here, all winners. Then you figure I just said 6 trades previously and 2 losers. So that's 10 trades and 2 losers. That's 80%. Right there, just on this leg from here to here, trading that way I'm showing you. All right. And I can tell you what, I don't have to be 80% trader. I can be 50% trader. 45, maybe, if I'm really good with my stop loss. 50, yes. I'm definitely going to have my stop loss tight, and I'm always going to probably make more than I lose. Okay? Unless I get in a long losing streak. A lot of times I don't get in long losing streaks, but I will tell you, I have had a 12 loss losing streak in my lifetime. Okay? And that's when I started getting shaken. And I had to get my mentality back and say, hey, what is happening here? And I had to realize that what I do, or what I've been doing, has been working. But this 12 loss streak, was it me? Was it the market? Was it something I couldn't control? It does get to you mentally, but that's where you have to try to maintain and realize that what you were doing worked. Don't go changing everything. Figure out what you're doing wrong, or if you did something different than what your system tells you. That's why you need to journal everything. That's why you need to mark down what you're doing, because everything needs to be consistent. This is a business for you. You need to be consistent with your business. All right. Nobody runs no store or anything else with any kind of, with no plan, with no structure and so forth. You don't work your job today. Every day you go to work without any structure, but you trade without structure. It just doesn't make sense. Remove these drawings and let's continue. Let's put Ichimoku back, because that's what we're supposed to be doing. I'm sorry I got off on a tangent. I'm sorry I went crazy. I tend to do that because I see so much happening with the market that I really want to explain everything, and I still can't explain everything because I'd be here forever. All right, so let's just move on. We see what we got on this chart already. We talked about it. So now we're on the Euro New Zealand dollar. Very nice chart, like this chart. You can see we're probably more than likely heading to the next resistance levels, which would mean that we're coming up into this area. I do like what I'm seeing on this chart. And I pretty much told you probably what was happening here. You could see we got distance, right? So then the market corrects. We kind of thought it might come back to this level. We didn't have any fractals in between to mark. So we didn't have any fractal levels. So we kind of start thinking Keaton or maybe the cloud, but it didn't pull back to any of those levels. Then we got our crossover. Then we did pull back the structure here. And then we pushed off, pulled back, and then pushed off. So look at how we pulled to structure here. And then look at where our target's going to be also. I'm going to show you where the targets are. This is structure right here. Let's back this up. Back this up for you. We didn't know what the market was doing here. We kind of like, okay, just be patient. Wait, this is what we see on the charts. And this is why I try to tell you guys, be patient. Wait, it's going to show you. It's going to talk to you. This market talks to you. If the market's not saying trade, don't trade. The trade is what we learn, what we talk about, how we see the setup. The setup is if you see a TK crossover that's bullish, you're breaking bulls fractals, you pulled back the structure, blah, 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 all the things that we talk about. That's the market telling you yes. But when the market's not telling you yes and you do it anyway, you're not listening to what the market's telling you. If the market's not telling you anything, don't do anything. If the market tells you short, then short the market. If the market tells you long, then long the market. If the market says nothing, do nothing. Here, the market's telling me nothing. All right. So then watch. Here, the market told me something. It told me that I broke structure. I'm starting to move higher. Jump on the boat. No, it didn't say jump on the boat. Okay. It said I broke structure. I'm starting to move higher. If I break structure, please mark that structure, because now we're breaking structure means we're probably moving higher. We're getting out of this range. To be completely out of this range, we need to get out of here. But we're starting to break structure. So if it's starting to do that, there we go. Now it's talking to me for sure. Now the market said, I broke structure. I pulled back the structure. You need to be looking long. What kind of trade is this? Cash flow. What kind of trade is this? It is a fractal bounce. It's also called what? If it's a fractal bounce, then it's a what? S-wave trade. This is an S-wave in Ichimoku, okay? It came right back to this level. Let me draw this S wave out for you. Looks like a Z wave, but it's a S wave. Comes back to that level right here, then you trade. So that's how you catch the trade. You shouldn't have done anything in here. If you just be patient, you do get an opportunity over here. Let's see where this target is. But first of all, we need to complete where we are. Let's close this out. And then let's look forward where we're going. So you already probably, let's mark this. Almost there. So the market could find a little resistance in this area. What would this area line up with? Let's see. Pretty much coming up to this level. See this top? So I would mark this as a zone. The market coming up in here. See if the market's going to falter here. Because if it does, what's going to happen is it's still going to continue this structure, this move to the upside. We're still going to look to trade, but here's what we're going to look for now. What are we going to look for? What are we looking for? What are we going to look for now? Anybody? I've been saying it all day. What are we going to look for now? We're in the N already. All right. So now we need to look for something else to get into the trade again. We did it here. Retrace to what zone? Fractal zone. There you go. Man, you guys really are on top of this stuff. Nobody can tell you you're not, because you are. We look to retrace back to this level. So what we're going to look for now is this. So we're thinking the market may have found a top. Well, we don't know, though. It could continue and just go straight up or wherever it's going to go. But if it's going to retrace, give us a little chance to get into the market, it's going to do this. We're looking for the market to do this because it's in this N wave structure. 1, 2, 3. Then it went higher and then made this wave here and then back to here and then here. So we're looking for the market to pull back into here. And then we're going to go long at that point. Now, if the market doesn't, it violates, then so. Also, there's a level that could hinder us a little bit. I don't know if this fractal is going to be vital to us. Let's see how far off this is. See, because this is the next level, but I dropped down to the lower fractal. But there's a couple areas in between here. So I kind of look at this level. It had more support on, more touches at it and more resistance and support. So I would use that level, but we could be seeing these levels. So let's see where the market pushes back. But in any fact, if you're trading the way that we've been trading, then you would just wait for it to come back here and trade your green entry. Now here's where you would have here's your green entry, right? You made profit, but not much. And then it came back and would have stopped you out. I wouldn't take this trade off of this level. This is my level I'm trading. I wouldn't take that trade. I would have been in the market here off of the price action. I wouldn't have taken the CMO trade here. Now, CMO doesn't let me down much, so maybe CMO, we're going to see this market push even higher. We're not going to retrace or correct here. The angulation is strong, and it is very strong on Tinkins and Kijins, and we may not see the correction. All right, it may push right through, and there's nothing hindering Chiku span. Nothing hindering your TK crossover is strong, pushing to the upside, and your cloud span A and B are angling straight to the upside. There is a little bit of divergence right here. So we could see the drop, right? So there's that divergence. Here's where the divergence is kicking in. This is divergence. From this point, it's going higher, but this point is going lower. We suspect the market to correct a little bit. It doesn't have to correct here, and it could keep pushing to that level too, even though there is divergence. Do not trade divergence. Just look to use divergence as an odds enhancer to enhance your trade or your possibility of getting into a trade. But do not trade the divergence because it's not an entry signal. It's just an enhancement of your entry. Something else to give you more clarity. All right, so that's what I see with the Euro New Zealand dollar. This is flat market with Euro USD. Really not going to talk much about it because you got mixed signals. You got a crossover that's bullish. You got a cloud that just turned bullish. We're failing to violate these lows here, but we're not bouncing on anything either. and we're just kind of like flat. So what I would wait for this market to really start moving, we're just breaking outside of this. So Chiku span is inside this level. Don't always look at just one candle, but like kind of think about the area that it's in between. You want to see Chiku span get outside of this area really. If it can get outside of that area, then you can see the market moving higher. All right. So we kind of want to see it get outside of this area. At that point, we have a crossover that's bullish. We just turned bright here. We could see the Kumo breakout at that point. So if you're a Kumo breakout type of trader, look for that Kumo breakout trade. But if not, then look for the market to do a couple things. So depending on where we violate or what happens here, if it pushes up higher based off of what we see, Chiku span slightly above price, TK crossover bullish, futures bright. So then we start to push higher. 3-row reversal, you would take the trade, break the Kumo breakout with a 3-row reversal because you have your signals already. Chiku span above price and TK crossover. All right. And then price above price breaks the cloud. So when that breaks, you take the trade long. If it breaks short, don't take the trade because you don't have your 3-row reversal, right? I wouldn't take that because it probably is not going to drop too far. So what I look for is the 3-row reversal. The market breaks to the upside, but I don't trade the 3-row reversal because I'm going to wait. 3-row reversal is going to take me more so to the 2 level of my trade. I trade at the 3 level. So what I wait for is the market to either bounce on this fractal, or if it's going to just violate, it'll come back and bounce on this upper level, which would then be a zone like this. So if it's going to get through this zone, it comes back and bounce on that zone. If it's only going to go up to this level, right? If we're only going to push up and can't break, then we're going to look at maybe it comes back down to this zone and then pushes through that level. Something like that. As long as we stay intact, what we have, Chiku span and all that stuff, everything aiming to the upside, then we can look for that. All right. Your cloud is thin right here, and then it got thinner, which means you're just tighter. You don't have any momentum at this point. Therefore, that's why we kind of really want to see the break above at least the levels I talked about with Chiku span getting above those levels. All right. Understood? Clear? Hope that helps you on that. You have any questions? I'm 5,000. Then I'm going to continue to move. All right. So I do like this as a bullish market. This is pound Aussie. I don't think it's coming back to the fractal. It's a little far. It'll take us below Kijinsen. We haven't broken any bear fractals yet. It looks like we're attempting to break this first bear fractal, but we may not. All right. So at this point, it's almost like a descending triangle pattern still. We could see the push off of this level if we don't violate this low. So if we don't violate this low, then we may see the push off. A close above Tinkinson is the move. That's what you got here. So I kind of want to see a green CMO for an entry. But if the market comes back, closes below this level, so the next candle is going to determine a lot because the next candle will stay above your TK zone here. This is your Tinkin and Kijinsen zone. If we stay above that level, then my green CMO is going to enter the market for me. All right. We don't have a straight N wave formation. This would be the formation, and we would be like our target would be pretty much close to where the top is. All right. At that point, you could see we do have divergence from here. So let's mark this. See, that's the top and this top. We had a little bit of divergence, nothing major. I wouldn't have really considered that too much. All right, so I want to see what happens here. We're kind of like inside this candle. I want to see what happens at this level. If we don't violate, then I'm going to look for a green CMO entry long. But if we do violate this low, then look to see if we get a push off of Kijinsen here, a bounce off of Kijinsen. All right, because I'm still staying with the long trade here. There's nothing to show me that I shouldn't be long, and I should just stay with that. The thing is, I'm not at great levels, not levels that I love. But we did break out of the TK zone, so that's a good thing. It should have been already in the long right here. But since that was a Friday, let's see if the momentum stays with us. If we get the momentum, we're going to have a green CMO entry. If not, then we'll see what happens, all right? This is pound CAD. Pound CAD, everything that I suspected, none of it really truly happened, to be honest with you. Because I know what I told you, and I'm going to repeat some of that stuff and show you that what I showed you didn't really happen the way I suspected. I did suspect a bounce off of this fractal, and we did get that. But we couldn't get through the 2 level. What do I tell you guys always? We need to get through that 2 level. I say 1, 2, 3, shooting for 4. No matter where my 4 is, even if it's up here, if I do not get through 2, I am not getting anywhere. I could get into some range. In this case, we didn't get through 2, and there were some signs you weren't getting through 2. Let me show you. There were some serious signs you weren't getting through 2. 1, 2. Even if you just look at this candle. All right. What's happening here when I see these 2 candles? There you go, cash flow. Yes, divergence. There was divergence here at the resistance point of the 2. We made a higher high, but we're showing supply coming into the market. We're showing supply coming in as the market continues to move a little higher. The supply did come in. The market fell. Those are the things you need to look for when you're trading, because you would have taken your trade down here. Now CMO entry would have been here. Now CMO would have lost you this trade. But look at the divergence also. I wouldn't have taken this trade. You know why? Why would I not have? There's 2 reasons I wouldn't have taken this trade. I wouldn't have taken this trade based off of CMO. I would have taken this trade right here though. All right, this is price action right here. All right. What is this candle? We don't even really need to know candles. We just need to break out of the zones. But if I trade the candle, it's a Pearson pattern. So I got this Pearson pattern. I move this, take the trade at that level. If I don't know anything about candles, I just trade the boxes. When I break out of the box, I trade the candle. So I trade long at this point. So I would have traded here, but I might not trade long because I'm too close to level 2. Therefore, I don't take a trade at level 2. All right, had the market dropped deeper, then it would have been more of a trade. Definitely wouldn't take it here because I'm at level 2 and I have divergence. So I wouldn't have taken that trade. And I wouldn't have suffered this loss because I never trade at level 2. All right, so now what do we have happening? We got a bearish crossover. We got a cloud that's not super thick, but super flat. All right, so therefore we're in a bad, as far as like moving to the upside, there's no momentum right yet. And we may be flat for a while. Let's see what this zone looks like. This zone is super big. I'm only going to mark the lower level of this zone. See if the market's still trying to honor this fractal. All right, see it? See that fractal right here? It's still honoring that level. So let's see what's going to happen. If it doesn't close below that level, then we might possibly see the move to the upside. All right. But also we broke bear fractals. So this is where I'm always like in between. But if Ichimoku remains bullish, we're inside a price with Chiku span. I want to see that get out of there and see this level hold. This is the fractal level. I didn't make it into a zone because look how big the zone is. We held up at the top and we're holding at the bottom. But we held here and pushed higher. We may hold here, push higher, but our high may only come back to the top of this level. Right? Because it's where we broke the fractal. But if we're going to stay bullish, because we have the cloud, the Kumo twist is bearish. I mean, the TK crossover is bearish, but the Kumo twist is bullish, but it's flat. And Chiku span is inside a price and possibly breaking below. I don't really love the move higher, and I'm showing supply coming into the market. I really don't love this move to the upside. I would, if I did trade this long, it would have to be at this level right here, no higher, because I think we might not get through this point. We have supply coming into the market, but then we could also see demand kick in and Chico span and everything changed. So I worry about these kind of areas and levels. All right, let me move on. So pound Swiss franc, let me remove some things on here. Pound Swiss franc is bullish. We're actually looking for the market to bounce on this fractal level. All right, we're actually looking to bounce here. Let's see if we get the bounce. If we do get the bounce, we want to see the market move higher. It will be in that M wave structure. This is a big N wave also. I'm going to mark it from this level. If we could get the bounce, let's say it stays where it is, then we'd be shooting for 1-to-1, which is going to take us back up into this zone here. So 1-to-1 gives us this level right here. So that's what we could shoot for. Now, there's a couple ways you can look at this market and trade this market. Whoops, we don't want to remove that. This is where we're shooting for. That's basically your 1-to-1. 1-to-1 is a measured move, which is Ichimoku, which is a N wave. I mean, a N value, because it's this leg. So what we're seeing is the market doing this. We're saying the market's doing this. 1, 2, 3, and then shooting for 4. Now, it doesn't just go straight up there like that. But the problem is we want to see if this is going to hold in this zone. If not, we get a breakout below the cloud. I don't take the breakout below the cloud. Reason being is because if I'm going to trade the breakout below the cloud, I have to have my 3-row reversal. 3-row reversal would mean I would have three things happen. I have my TK crossover be bearish to go below the cloud. I have Chiku span below price, and I have price break the cloud finally. Therefore, I wouldn't take the breakout if I don't have those. All right, so therefore the breakout would mean nothing to me, because at this point we're still blue skies, so bright days ahead. We're still breaking, well, actually we just broke a bear fractal. All right, but we expect that on a correction, and this would be the V wave where we are now, and then ending to the N wave. If this V wave is gonna drop lower, then I would think that we start to look at these levels. All right, it could come down, the market could drop down to these levels. All right, see this zone here, this top of the zone, and then the bottom of the zone. So we look to see if the market's going to hold here for our trade. If it can't hold, then where could it go to? It could go to this level. Doesn't mean we're going to trade at that point. We want to see if it's going to hold at that point. Or it could go here. Then at this point, we're going to change all of our thought process. All right, but if it can hold at this level or this level, we want to still make sure we have all of our signs intact to take the trade to the upside. All right. Now for me, here's how I look at this. We're bullish. We trade long until we close below the cloud. It's like this is the lowest point you could go before you decide to change your bias. In here, you keep your bias of what you had up here, because this is just still now just a support zone where you think the market can move higher. Once it breaks lower, then you broke structure and you think that now you start shorting. All right. I have some questions, do I? I can't examine NASDAQ on today because this is all Forex today. All right, so again, pound yen looks pretty much the same as previous. These big thick clouds, we kind of can tell we got bottoms. Again, you could see what happened. Big thick cloud, bottom. Didn't have a lot of distance, but you did have a big thick cloud, and it started to roll over. And when it rolled over, the market moved higher. You may have had some divergence here also, but I don't know. I don't see a lot of divergence. Sometimes you have pronounced divergence where it's easy to take that trade. Here, I don't know what's happening with the market, guys. I just see some levels. Maybe the Kizensen level holds us. We're still bullish, but it looks like we're getting flat. Reason being, we got a crossover here, and then a cloud that looks like it's trying to cross over. It's flat. So you may be just like flat area where the market's now we're pushing back deeper. I don't love this fractal level. because it's too deep. It's so deep. I want to see if the market's going to hold at Kijun-sen or the cloud. We got confluence with these two here. So let's see if it holds in this area. So if it drops even lower, then the lower it drops, then we kind of start to change our bias, right? So then if it pushes back higher, you can wait to take the breakout and then start to decide if you're still in this N wave structure right here, and then find your targets. All right. But at this point, we haven't stopped dropping. We have levels where we're thinking it could stop, but until it does stop, then I have nothing. Okay, there's some levels that we could really look at, real good levels. Let me mark a couple real quick. See what happened here. We're sitting on this level right here. And then the next lowest level would be this fractal here. I don't know if we push that low, but then your Kijun's in here. So I like this zone where we are. Let's see if we could move higher. A lot of supply coming into the market right here. So I don't see the change yet. And I don't see the price action reversal yet. So my bias is just to wait right now. See what the market's going to do at these levels. Pound New Zealand dollar, strong bullish market, all right? Bounced off of Tenkan-sen. You probably had like a 23.6 reversal correction right here, and then the market continued higher, okay? We never pulled back to any of these levels. They were far away. When you get too far from these levels, you don't think they're going to pull back to those levels. So therefore, a strong trend never closes below Tenkan-sen. And you could see we never closed below Tenkan-sen. All the way up here. This is a strong trend. That's why I said this pullback probably like a 23.6. Let's see what it is. Let's just measure this. 23.6, just like I thought, because it pulled back not much. And so therefore, you always have a 50 at your Kijun-sen. So that's going to be your 50. 23.6 is near Tenkan-sen a lot of times on a strong trend. I never need Fibonacci retracement levels because I always know where the 50 level is off of 27 period move. I mean a 26 period move. I always know what this level is. So therefore, I never need Fibonacci retracement levels. But sometimes I'll put them on my chart, and usually my fractal levels, fib levels, and so forth are enough to hold them, see where the market holds, and you can trade those levels. So this was a 23.6, moved higher, violated this fractal level. We can probably now think maybe we're going to see the market push back to this one. If we push off of it, we would use this for our entry. You could already been in a trade. You've been in a CMO entry right here. Even if you took this trade, you wouldn't have been losing. You would have been in a winning trade. Every CMO entry from the Kumo breakout was a good trade. So here was your Kumo breakout. You start trading long now. All right. So if you start trading long, you take a CMO entry. The first CMO entry you would have taken was along there. You make profit. All right. Along here. I don't know. You probably don't make profit. You get stopped out on that one. Along here, you're good to go. And then along here, you're in profit right now. And then this long, you'd have been in profit. So really probably one loss out of 5. So you could see what CMO kind of gives you. I want to back it up real quick. I'll show you what it shows you on the last trend. So the last trend, if we were bearish from this point, I probably wouldn't have caught any of this, to be honest with you. And if I take every CMO entry, that means I'm going to take every single one based off of just following the system. That's a losing trade. I think that would be a losing trade. And I think we would consider these losers maybe. All right. And then I don't get another opportunity till here. Anything I lost over here, I gained over here. And then I get another entry here. That's a winner. I get another entry here. That's a winner. So therefore, I take one loss. I'm going to consider these 3 losses. Let's consider these 3 losses. And then 3 wins. Out of these 3 wins, we way cover what we lost. That's why you need your stop loss right at using the candle. Because you don't need to sit in a loss that's going to take you past. You say, well, I'll get in here and I'll take the loss up here, right? So therefore, that means you're taking the loss up here at this fractal. You're getting in down here. Your loss is all the way up here. You could cut some of that. You get in stop loss right here. All right. So you get in here. You're getting in here, and you're putting a stop loss above. Let's say you put it above this candle. You don't even need it there. It could be a little bit below this, above this candle. All right. We're tight because momentum should go our way. And you could see what happens. So on this one, I'm just looking, we got a strong trend. There's no signs of reversing here. There's nothing to hinder us. Look at, there's no resistance points near us. All right, nothing to stop us from moving higher. I would mark this level to see if we're going to push up to this area. You got a flat cloud level here. And then you do have some levels that could be meaningful in the future. Got this level. And we just pushed up on that point. So we might drop a little bit. We could see a correction to this fractal and then move higher. We're not getting too much distance because we're still angling. So distance would be if this was flat, if Kijun-sen stayed flat, right? If Kijun-sen stayed flat and we got distance, then I would think we're not making much higher. But both of them are angling with the distance. I want to be in a trade like that. All right. Let me clear this. Let me move on real quick, guys. I'm about to miss my game now. I thought I'd be done by 3. All right, but I'm getting ready to get done. So again, this is a bearish trend. All right, but we broke structure here. And we've broken structure in a couple areas, but you could see the trend stays intact. But now we broke this structure. We got a green, we got blue skies, sorry. Crossover is bullish. Chiku spans above price and price broke out of the cloud. We should now change our bias. All right, so now we're looking for long trades. So at this point, I never would expect it to come back to this fractal level, nor this one. Maybe this one, but this one lines up with the cloud level. But the main fractals that I'm looking at the closer fractal levels. So I think maybe we bounce in this area. All right. I call this a zone. Let's look for the bounce here. But if we violate this low, this fractal, we're going to push to the cloud and to the Kijun-sen level. That's where I would look for my trade. Now, my problem is that the cloud is flat on A and B. Flat. Kijun-sen's flat, Tenkan-sen's starting to flatten out. Chiku spans above price, failed to break the cloud real clean and then came back below. So we still have a little bit of resistance ahead of us. We need to see if this level is going to hold. If it's going to hold, we're going to look for our trade. You can wait for your green CMO. We're seeing that we're actually seeing supply coming into the market. We want to start to see that demand come in. If we push lower, look for the bounce off of these levels here, your cloud and your Kijun-sen. All right. New Zealand dollar CAD, bearish market, very bearish. Love the trade to the downside. Nothing should change your mind for bearish. If you trade bearish market based off of being below the cloud, the crossover is bearish, Chiku spans below price and price below the cloud, and then you trade your CMO entries, right? So if you trade the CMO entry, you went short here, right? So let's mark the CMO entry since the time we should have been short. This would have been a winner, all right? This would have been a loser. This would have been a winner. This would have been a loser. And this would have been a winner. And this would have been a winner. And this would have been a winner. So 1, 2, 3, 4, 5, 6, 7 trades. 1 loser. 2 losers. So 5 wins, 2 losses. And you would have taken all those trades. If you trade just the CMO entries based off of the direction of Ichimoku with a TK crossover bearish, price below the cloud, angulation and everything, you would have taken short entries, and you don't always have levels at this point now because now you're trading the CMO. Now the CMO becomes super strong when you do have a level. All right. But at this point, you don't always have a level now. But you want to make sure some things. You don't want to, like, say it gave you a short entry here, but you got big distance. You probably don't want to take that trade. All right. So be aware of the market. Somebody said, what? I don't know what you're asking. I just see a what. All right. So let's move on. What, by 3? Yeah, I'm not done. It's past 3. It's 3:30 almost. All right, so this is a bearish market. We had some consolidation here, but it looks like we broke consolidation. So what I'm looking for, New Zealand dollar, Swiss franc, I do like the bearish market still. Everything on Ichimoku is bearish. So what I'm going to look for is this. So we actually, let's do it like, we'll do it like this. We just broke this level right here. All right, so what I'm going to look for myself is for price to retrace back to the bottom of that level. Other than that, I'll just wait. I'm not going to jump in here, so I'm waiting for is the market to push back. Give me a trade short here, and then I'll short at that point. All right, everything's bearish. You got a bearish there. Angulation is super strong here. That's what you look for, a good trade. Angulation. You want to get in angulation trades with Tenkan-sen and Kijun-sen. It's going to be a good trade for you. Chiku span's below price. Price is below the cloud. Everything is bearish, super bearish. There's nothing to stop us. I'm all the way up. All right, so there we go. Let me clear that. And where could we be pushing to? I don't see a clear N wave structure. I'm not going to mark that big N wave. That's too big. Where could we be pushing to? I want to make sure we don't have anything that could really hinder us. Just looking at these levels, we're past that level here. That would basically be pushing back up into that level. We have a nice level of support and resistance about here. So we could be pushing down to about, what, 59,749 with this New Zealand dollar Swiss franc. Now remember, it's not going to push straight down there. We're looking for the correction back so we can short this market. Angulation is real nice on everything. Strong angulation here. You should be in the trade already based off of angulation, but this one probably hard to catch because it was a breakout anyway. So you wouldn't have probably caught that. But when you see angulation like this, this is exactly what I'm talking about. You take angulation trades like that. All right. So I'm looking for the market to correct back to this level, then I'll short. So basically just looking the market to pull back here and then short to the downside. All right. And shooting for the levels that I talked about. I'm trying to get through now. I'm almost done, guys. New Zealand dollar yen, we're bearish. We never closed above the cloud, so we were bearish. We actually should have been short one time here, one time here. Let's look at the CMO entries short. So your shorts would have been, you had a Kumo breakout here. You could have taken that short, but that's already in the process. You would have had a short here. That would have been a losing trade. You would have had a short here. That was a losing trade. A short here, small winner. Then a short here. It was a big winner because it went all the way down, and then it gave you another entry here. So this time that was a winner, and then it gave you another entry here. These are kind of part of the same trades. So this was one trade. If you didn't catch that one, you would have caught it here. If you didn't catch that one, you would have caught it here. So it would have been 1, 2, 3 good trades and 3 losses. All right, so that would have been a 50% trade. This one might not have been a loss because it dropped from here down. And if you're trading, next week I'm going to talk about how to scale out of a trade. All right, we're going to use that your ATR. I'm going to show you how to do the ATR trade setup again. So remove drawings. So on this, see, we're pushing to this low right here. This low is strong, right? And at this low, let's see what we have. I don't think we have divergence. The Kijun-sen is flat, but you got a crossover development. Starting to get angulation on the cloud. Kijun-sen remains flat, we're not getting through this level. Even if we get through this level, what am I going to look for? I'm going to look for the break and then the correction back, and then I'll trade at that point. I remain the same with everything I do. I'm a record to you guys because I'm saying the same thing over and over and over, because I do the same thing over and over and over. I look for the exact same trades over and over and over. I don't change much of my process. The main things remain the same. There's some things that may change, as far as, like, I may show you certain things to use to define the trend, moving averages, whatever. All right. But I'm never going to change the structure, the fractals, the support and resistance, what I do at support and resistance levels, how I handle support and resistance levels, when I break levels and return to levels, never trading the break of levels. I'm never going to change those types of things. So I remain consistent at what I do. And that's what you guys need to do. Remain consistent at whatever you do, whatever you find is your niche. So therefore, I don't trade this bounce here. Now, if I didn't have Ichimoku on my chart, I would trade this long based off of price action entry here. And if Ichimoku was showing me signs, I probably would still take the trade. But trading with Ichimoku, I'm going to trade the direction that it's taking me. So therefore, I'm going to wait for the break, test, and then short. All right. So that's what I look for with New Zealand dollar yen. But I think you're going to see you might see a bounce at this level, quite possibly. We're at 76.198. So that could be an area where we see a bounce on the market. Let's move down. This is a flat market, and we're finding support at this level. Thick cloud, but it's starting to angle. All right. So we need to see if we could get through this level. There is some slight divergence at this level. All right, now this was divergence here that kicked in already. The market pushed higher, but then now we're looking at from here to here. So that's like not really divergent. So don't get fooled by that, because this divergence here kicked in already at this level and pushed higher. Now we want to see if the market's going to close below this level. Again, flat Kijun-sen, but we're getting a crossover that's bearish. Chiku spans below price, angulation to the downside. I don't take the break again, guys. What I wait for is to see if the market's going to break. If it breaks, then I'm going to test, and then I'm going to short. If it doesn't do it and I miss it, then I miss it. But I'm not taking the breakout trade. But breakout traders, if you want to trade when it closes below, that's what you could do. That would be for breakout traders. So if you close below this level, I consider that an opportunity to get short. Not for me, but that's how a breakout trader would trade that. I just wait for the test, then short. You have nice angulation developing. Chiku span is getting below price. It needs to be below this level. TK crossover is changing bearish, but you're flat with Kijun. All right, so you have no momentum to really break this level, and I don't see any strong supply or demand at this point. All right, so whatever you do with New Zealand dollar, US dollar is probably a wait. So USD CAD, I like this. It's bearish. Its structure is nice to the downside. You've been violating bear fractals throughout. You haven't violated any bull fractals. You've been bouncing off these levels pretty nice. So we've got distance here, and we found a flat bottom, and we don't have really divergence. Our cloud changed over. Let's remove some of this stuff. Our cloud changed over to bearish. All right. We got a crossover that's bearish. We're flat, and we're starting to pull back a little. Where do we pull back to? Where do we short this market? Look for a pullback into this zone right here. Push up to this zone, then short the market. If the market pushes back into the cloud, then take the breakout back below the cloud. If it goes above the cloud, then all bets are off. We're different. All right. But the structure right now, we're violating the bear fractals, as you could see. We're not violating any bull fractals. Therefore, we remain short. We're looking for the short at this level. Everything is bearish on Ichimoku. All right. That's what I look for on USD CAD. USDC, Swiss franc, very flat market. I wouldn't trade this based off of Ichimoku. I would put my levels on the chart. Ichimoku's flat. Cross over there, cross over there, cross over here, cross over here, cross over. You shouldn't have that with the cloud. Therefore, that lets you know what's happening. You're flat right here. So this is the strong support level, and you're pretty much at it. I would make it into a zone because we have this low here. And with that, you're probably seeing this right here. descending triangle pattern. So we could see a bounce on this area, and if the market pushes in a little bit lower, doesn't close below this level, then we may see a pushback up to the resistance of this descending triangle pattern that we're seeing here. All right. And that's where we would look for. Actually, if I was trading this right now, I would take Ichimoku off the chart. I'd look for a long here based off of price action. Then I would look to see the market pushes up to this level. And then I would short it because we're in a descending triangle pattern at nice support level. This support is really nice. As you look back, you could see bounces here, bounces all through here, bounces here. A little crossing in through here, a little bounce there. Farther back, let's see how far back this level is. All right, that's pretty much it. Good bounce here, but that's what I look for. So I think we got a descending triangle pattern, possible bounce, move to the upside. Let's move on. The yuan is very bearish. TK crossover is bearish. The cloud is thin, so this may be a flat level for us. Let me mark this. And it'll be a zone, big zone. So I want to see what's happening here. We did break. We're late to get into a trade, and we're past levels already. So I want to see us get through this point because we're flat from here. Because you found a bottom, and you're right back at that bottom, and you never moved anywhere else from there. All right. So we're flat here. I wouldn't even trade this right yet. I would see what's going to happen at this area. If I had nothing on my chart, I would probably look for a long here. If it violates, I would look for the bounce back to the upper side and then short. All right. So the way I look at this market, it could do a couple things. It could either bounce here. At that point, I would take a long if I don't have anything on my chart. Just trading just trading the market. But if it's not going to do that, then it's probably going to break, and then come back to structure and then short. Then I would short it at that point. Either way, I'm trading in this area. I'm never trading down here. I'm never trading up here unless I'm bouncing on something and we already started moving, right? So that's what I see with the yuan. Let's move on. USD JPY, still bullish, but we got a crossover that's bearish, starting to get weak. Chiku span is within this price realm. We could be starting to diverge. Let me see what we got here. So I don't consider any divergence, right? Because this high was right here. With this high, moved higher, so it moved higher. So no divergence at that point. Now there is a sign of hidden bullish divergence. And it could still kick in. It could kick in anywhere. I don't see a level to trade it yet. Let me figure this out first. Because this is the main level where there's some support. We could drop to there, but let me show you this hidden bullish divergence. But currently we're bouncing on this fractal. Now we violated this upper fractal, but we're kind of sitting on this fractal level right here. So if we violate, and so we're lined up with this fractal level, which we rejected here, and we also bouncing on the cloud. There's weakness with the cloud because it's flat and angling to the downside. So we may see this crossover. If it pushes down through this level. So look for a couple things. I think we're still pushing through. All right. So I don't know if we bounce here. If we push through, we may push down to this level. But what the issue is, right, is this. There's hidden bullish divergence because we've got this. See this low? That's this low. See this low? Well, actually this low. That's this low. This low is higher than this low. But on the chart, this low is lower than this low. This is hidden bullish divergence. In somewhere in here, I'm looking to see if this market's going to push higher. It could be this level. It could be down here. I need to see what happens. I need to see signs that we're going to push higher and not continue this move. Now let's also figure this out. Let's see where this move could end, because what we're also going to measure is our end wave. So this is a bearish N wave, right? Whoops, I didn't mean to use that. We want to see where this could end. I don't see that. Maybe. So mark this level on your chart. Put this on your chart. And that's going to be 112, 197. That's a one-to-one measured move. What that's going to be is the it's going to be the end value of this N wave that we're seeing. But again, you always need to get through level 2, because if you don't, that's where we could see the market push higher, and therefore we would change direction. All right, we'd have a W pattern develop at that point. All right, but if not, then we're going to push near into this area, which would be near our end level. At that point, I would think we might see the market move higher off of this, if we still have this, we have this divergence. So that's why I'm thinking we're going to see this move higher with that hidden divergence. But I just need to see it happen. We can suspect and analyze it all, but we just need to see it take form then. So if we need to see it take form, we wait for the price action to show us at these levels. All right. And I'd be bullish at this point still, because now Chico span's starting to get below price a little bit, and I got a bearish crossover, and I think my future is starting to change. So this could be downfall. So I would watch to see if it does drop. Then we would start looking for the opposite moves. All right, and continuing the N waves to the downside. All right, but I need to see that change all over. All right, so now what's the last couple things we've got on our chart? Mexican peso, I told you before it was a little distance. It's pushing back. It's very thick cloud. That's how we knew we were at a bottom also. Look at a big thick cloud. This cloud too thick, but also it's not angling to the upside yet. All right, so we're probably still could see this bounce a little bit down in this area, flatten out. I don't really see it pushing harder down into this area or past this area, just based off of the cloud a little bit. I don't see clouds like that too much, where it's getting even farther apart. It's super far, super thick and flat on span B. All right, span A is hanging to the downside hard, but getting farther away. I think if we do push to this level, we may just range down here, because we don't see clouds like that with the market not reacting to that. So I don't really love this thing right now. The Kron starting to be bearish, pushed back up to this fractal level right here. I don't know if it's going to honor this zone, but it could push up into that area. We're bearish. Our crossover is bearish. We broke below the cloud. Whoops. We broke below the cloud. We got N wave structures to the downside. Did we hit our target? Let's see if we hit target on this one. I would mark it from here, because we had 1, 2, 3, 4. Then we go 1, 2, 3. We didn't hit target because that's way down here. So we're not even near that target. Looks like we're kind of flattening out, but we're still bearish. So I'd wait to see the breakout, and actually to see if we bounce off of any of these levels. If not, if we don't hit those levels, then watch for the breakout. Just turn bearish here. Chico span's below price, broke Kijinsen. Your TK crossover is bearish, and the price is inside the cloud. So we need to see what price is going to do. Need to break outside of that cloud, continue this downward move. All right. We don't want to see it break this structure level right here, really. And if it does, it could push up into this area. But once we break structure, then we could start seeing this thing move higher. But the way we see our signs off of Ichimoku, it's very bearish. All right. BTC USD, I'm not going to cover. I covered that yesterday. And I covered XRP yesterday. So let's go oil. And we'll go oil, gold, and silver, and we're done. So we're flat here. This is a flat level here. All right. We thought we might see some resistance here. We're starting to see, well, actually no, but we are starting to see supply come in the market, but I don't see divergence though. All right. Divergence is like this. Look at this divergence here. So here's where the high was, and then you came back to this high. Let's mark those two areas. When I see this kind of divergence, because this is a double top, not really, in my eyes, it's not a true double top, but when it hits the level twice like this, or a couple times up here like this is flat. You're not flat here. You're showing the supply coming into the market. Then you should know you'd be looking for a short here, and the market dropped big time. This is how I trade the market. That's what I look for when I'm trading these markets without, but Ichimoku wouldn't give you this trade because you would be looking long at this point. And then you'd be waiting. And this is why sometimes it's a little bit harder for me to analyze some things, because I do see certain things that are starting to happen with the market that Ichimoku won't allow me to trade. And I have to say, wait for the trade, or wait for this to happen, or wait for this for the market to go into this direction, or do this. In this case, it looks like it's bouncing off of this level, but the distance is so big and you're getting a thick cloud. I think we fall below here. I'm starting to see the supply come into the market, not major. So we could range here too. But if we violate this low, we'll be back inside the TK zone. We got too much space right here. So I think we're going to see this drop to the downside. So at this point, I don't love oil long. I mean, oil could push back up to this highs. All right. But I don't think you get past, I don't think you see oil go past this level anytime soon. Stronger would be oil dropping. All right. Now, oil did give us this indecision candle at a strong support level. So we want to see, but that's what I'm saying. Even if it breaks this level, like I would say if it closes above this level, we could see it come up, give us that double top, right? But at that point, we may be seeing that divergence, and we got so much distance between these two, and your cloud is so thick and flat, hasn't rolled over yet. We want to start to see that. And then at that point, we probably see this thing drop. But if we close below this level, then we're dropping. All right, where will we drop to? That would be the thing. Because there's not really great levels near us as far as fractals. But there's one here. We could pay attention to that. And there's another fractal here that could be valid. And then you got Keatonson. We could push all the way back into those areas. But I don't love oil long, because you may get an opportunity long, but I don't think it's going to be too much off of you're not going to get past the 87 level. Now you could, but I don't see it because of what we see. So here's silver becoming strong, nice angulation. Future just changed to blue. Chiku spans above price. Everything is strong bullish here. Let's mark these upper levels real quick. Mark this high, because we always look at these levels. All right, so we're getting some distance here. We may see the correction. We could correct back to this fractal, but I don't know if we get back this far. If we do, we're coming back to the cloud, really. There's another fractal level that's relevant here also. So we could see the market drop back into this zone area here and then push back higher, but it's currently a very strong trend. We're getting a little bit of distance, but it's still a strong trend to the upside. At this level here at about 25, 31.899, you come into a double top level where we then would say, let's see what happens there. I think you could push up to that point, but before we do, I think we see a little bit of downside. Now we're trading inside of one candle, so I always tell you, usually the way it breaks is the way it's going. Doesn't mean long term, but it could be for a minute. So if it breaks lower, we're probably pushing down into these areas before we push back up and attack this level. If we break to the upside without lowering, going through the bottom, we probably do push straight up towards this area. We do have some support, other support resistance levels that are strong too. Here's another strong level here. I would be careful of this level, and we're right at that level because we got here, here, and then here. So this would be a level that we're worried about, and that's what we just hit. That's why we could see this drop a little bit. All right. So you're inside of one candle. We need to see the next day is going to be relevant. All right. Last thing, gold. So gold is bullish. Gold, again, probably shooting for these targets up here. Pretty much looks like silver a little bit, but a little bit better levels, because I think we could bounce here. I'm going to make this into a zone. All right, we're just getting momentum with gold. So right here, I think we push in this area. This is where we look for a long. I think we're going to see a long. Let me measure this first. See if we hit the 1-to-1 on this one already. So we didn't hit the 1-to-1 again, missed it. So we're on the next move. So the next move depends on where this low is. All right. If the low is going to be, let's see where we could be. This would be the low. We would be shooting for this area here. Yep. If it drops lower into like the zone here, then we would still shoot. We're still shooting for this area. So I think that the market, once we see a bounce off of this level, then I think we're shooting up for this point. We're starting to get good angulation on the cloud. We just got a Kumo twist. Nice angulation on Tinkerson Keatonson. Chico spans above price. Price is above the cloud. We're violating bull fractals, not violating bear fractals. So the market's going to continue this direction until structure is broken. And that's what I see. And I like this move higher. Now, we in the next couple of days, we may see a little bit of a retracement. But let's just look at this real quick, too. Let's look at that retracement. Let's see what it is. We're going to measure that small retracement. We'll go with fibs. All right, so that retracement, in order to be a 50, it would have to come back just pretty much a little bit lower than that level. So we're still above 38.2 as far as closing. So you can see the levels. 78.6 right at the cloud. All right, so I do like this long. But again, we could still possibly see a little bit of downside into this area. So I think like the most you see is what you're going to see is like this. We drop, maybe we stop where we are, or we push a little lower and then we head out. Then you will have your N waves. You could see them. All right, and I think we move up into this area. All right, that's what I see. That's what I got. Do I have any questions? We pushed this thing for 3 hours, guys. Unbelievable. We need to get this down to like an hour. How am I going to do it? Can somebody please tell me? How do I get this down to an hour? Maybe I do less pairs. All right. But I mean, it is what it is. If you have to watch it a few times, then I guess you got to watch it a couple times to get this breakdown. I can only do this breakdown like this once a week because it is big. But hopefully it's helping you. That's the main thing. It's showing you levels. It's showing you how to trade the market, showing you where you could get into the trade, showing you what not to do, showing you signs of what can happen if you have a thick cloud, or you have divergence, or you have angulation, or you don't have angulation. All those things add up into putting into your plan to understand what's happening with the market. I hope I am helping you. All right. And if I'm not helping you, you let me know. All right. Until next time, guys, you have a great one. Thank you, Jan. God bless you all. So long.